There's the excess savings is wearing out. We had something like $2.3 trillion, and we have $600 billion or $500 billion left of it. That'll wear out. But this is the first cycle we talked about excess savings, right? You didn't need excess savings to support an economy or even create growth before, right? So that's kind of an extra kicker to it. Yes, when it wears out, we're going to have to get into more traditional monetary system, credit channels, those kind of things. But so far, household sector hasn't even needed to borrow to consume here, right? It's used its wages, it's used its excess savings. So we're talking about getting towards a more traditional cycle, and that's not even until next year when it wears out. So there's that aspect. Delinquency rates on credit card debt, yeah, they're rising, but they were also historically low, and they've bounced up to pre-pandemic levels. So when you look on not a 2-year chart, but you look on a 10-year chart, it's a blip and it's pretty low. Like it's still historically low. So, and when you come back into student loan payments, yes, a problem certainly to those that are refacing it, but the BEA comes out with estimates that shaves off something like 20 basis points, 30 basis points to growth. So it's not a crippling force. The real issue underneath the surface, I think you're right. The oil pump prices will be key. Yep. That'll be important for it. And I think we actually get into markets is the resilience of that economy, coupled with those kind of inflation headlines bottoming, means that bond yields are going higher, and I think that's a bigger problem for the markets.
Philip, boy, you got a lot in there, man. We appreciate it. Philip Colmar, managing partner, global strategist, MRB Partners in studio. This is Bloomberg. Let's get some company news right now with Steve Rappaport.
Paul, shares of GM, Ford, and Stellantis are up as union workers stage an unprecedented strike. Bloomberg's Gina Cervetti reports.
The United Auto Workers started walking out on plants at each of Detroit's big three as contract talks broke down. So far, they were striking a Michigan Ford plant that makes the Bronco SUV, a Missouri General Motors factory that makes the Chevy Colorado pickup, and a Stellantis plant in Ohio that makes the Jeep Wrangler. The limited strategy so far is designed to cut production of profitable vehicles while minimizing the impact on the union's strike fund.
Thanks, Gina. More signs that Disney could be ready to offload some media assets. Bloomberg News has learned stand-up comic turned media mogul Byron Allen is offering $10 billion for Disney's ABC network, FX, and other TV properties. Bloomberg intelligence analyst Geeta Raghunathan notes this is a challenging time for Disney.
More important for Disney right now is to somehow kind of show the market that they have a plan for their linear TV networks. And the linear TV networks have really been in the news a lot over the past few days, whether it was that dispute with Charter, and more recently, you know, all of these news reports about them looking to kind of dispose off some of their networks and multiple bidders emerging. So there's a lot going on there, but I think as soon as Mr. Iger can kind of clarify the narrative, it's all going to become much better.
That's Bloomberg intelligence analyst Geeta Raghunathan. And we're likely in for one more interest rate hike from the Federal Reserve this year. That's the projection from economists surveyed by Bloomberg. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg. Stay tuned for more Bloomberg Markets with Paul and Matt coming up after this.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. Seeing some red on the screen here. S&P 500 off 0.8%. NASDAQ taking it on the chin here off 1.3%. Yields tick a little bit higher. 10-year Treasury 4.31%. How about that 2-year? 5.02%. Not too shabby. WTI Brent crude oil solidly above $90 here at $90.66 a barrel. With our news in New York City, here's Michael Barr.
Paul, Matt, thank you very much. About 13,000 United Auto Workers at 3 different plants kicked off their strike against all 3 major U.S. automakers for the first time in the union's history after the 2 sides were unable to reach a deal. Many of the union leaders, supporters, and fellow employees gathered outside the Ford Michigan Assembly Complex in Wayne to cheer on the workers who began walking out at the stroke of midnight. Democratic Congresswoman Debbie Dingell of Michigan was there.
They don't feel like their earnings have kept up with inflation. They're actually making 10% less than they did in real terms in 2008 and 2009. So they want to see cost of living adjustments.
However, GM CEO Mary Barra told David Weston on Bloomberg's Balance of Power this morning a strike would hurt the company and its employees.
Our team knows how to manage these situations. They're staying agile, and we're going to do what's right for the company. We're going to make sure everyone stays safe. But this is a strike that didn't need to happen. President Biden will deliver comments about the UAW strike, and Bloomberg will carry it live when it happens. After a plea deal broke down earlier in the summer, Hunter Biden has been indicted on federal charges. Bloomberg's Nancy Lyons has the latest.
Hunter Biden is charged with 3 counts related to the purchase of a Colt revolver in 2018. He allegedly lied on the form that's required to buy the gun that he was not using drugs. But that was a period when the younger Biden had acknowledged struggling with an addiction to crack cocaine following his divorce and the death of his brother. The felonies carry maximum sentences between 5 and 10 years in prison. A special counsel is still investigating Hunter Biden and could file additional tax charges. In Washington, Nancy Lyons, Bloomberg Radio.
New England is about to face Hurricane Lee this weekend. The Category 1 system impacted Bermuda and is weakening. Maine Governor Janet Mills declared a state of emergency. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr, and this is Bloomberg. Paul, Matt.
All right, Michael Barr, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live with you here in the Bloomberg Interactive Broker Studio. Coming up in the top of the next hour, we're going to check in and see what the latest is on this strike. You know who knows that stuff? David Welch. He's the Detroit bureau chief for Bloomberg News. He's right there on the ground, so we'll get the latest from him. I'm looking at ARM Holdings. It's a crazy trading day today. It opened, priced at 51 yesterday. Had that nice 24% pop yesterday.
No,
nice.
It was up at the end of the day.
It was up at the end of the day.
I thought too. I thought it was going to finish down because it was indicated at 63, then at 58, then at 56, and I thought, this is going to be lackluster.
But here we are today. It opened up, actually it had a high, 52-week high today of 69. We're now trading off 1.6%.
52-week high.
Yep, exactly. Off 1.6% at $62.68. Great article, great on the Bloomberg terminal. The question is did SoftBank leave money on the table? And the answer is yes. But I still call this a very successful deal for all involved. And I'd give the investment bankers a pat on the back here. Everybody made money, not too much money. That 24% pop the first day, a little much. You like to see it around 10, 15%, but still okay. The bottom line is in this article on the Bloomberg terminal says Masahiro-san of SoftBank, he needed a win. Because, you think about the year when he lost the Vision Fund, lost $32 billion in a year of flameouts with WeWork and DoorDash. He needed to deliver a win for his investors, for his newly minted public shareholders, for his bankers, for everybody's needed a win, and that's what they got yesterday.
Yeah, absolutely. I know that you're always aiming for basically a low double-digit pop.
Yeah.
But I think 24% is close enough, especially since you've seen at times shares double on the first day of trading. That's leaving money on the table. This is good.
This is good. This is respectable transaction. So again, stock trading off a couple of percent today, but still well above that $51 IPO price. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, we are bringing it this hour. We're going to have the latest on the auto strike from Detroit. David Welch, he's a Detroit bureau chief. He joins us. He's plugged in there. And it is Friday, which means Munis in focus. Joe Misek, he's going to be here. Matt's all fired up for that. Plus, we're going to talk about one of our favorite asset classes, which is private credit, raising all kinds of money here, making big loans and big returns. And our go-to person there is Randy Schwimmer. He's co-head of senior lending at Churchill Asset Management. He's in studio, one of the smarter folks we chat with on a regular basis. Speaking of smart people we talk to on a regular basis, John Tucker. He's got a Bloomberg Business Watch.
All right, as we wait for President Biden's comments, what's the over-under on this? We're wrapping up the trading week with the major averages trading lower right now. UAW strike that could lead to higher vehicle prices, and that would cloud the inflation pictures. The Fed is set to make a policy decision next week. Lower today, but technology has been among the best performing groups in the S&P 500 this year. And Neil Shearing at Capital Economics says tech can continue to lead the way in the U.S.
The US is undoubtedly leading the way and will continue to lead the way, not just in the innovation, but importantly, diffusing that through the economy. So it's not just innovating the technology, building it, you've got to get it out into the economy. The US on every metric is leading the way on that.
Right now, the Dow down 206 points, S&P 500 43 points lower, down about 1%, and the tech-heavy NASDAQ 100 is now down 235 points. That is down 0.7%. Finally, I was debating whether or not to do this one. The L.A. home that served as the exterior of the Brady home, the TV show Brady Bunch, sold for $3.2 million.
Nice. In Cali.
Marsha.
That
was designed by...
a sweet pad.
Yeah, it was a sweet pad.
Very 60s,
designed
70s
by
hip.
Mike, the architect, for 9 people. No, 8, 9, 10.
Well, you got to include Alice, right? So
2 bedrooms.
Yeah.
He was a great architect, wasn't he?
Mike Brady, the architect. I forgot he was a line of work. I forgot he was an architect.
Did Alice have her own suite, you think?
I think she was shacking up with Sam the Butcher.
Yep. All right, John Tucker, thank you so much. Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Broker Studio, also streaming live on YouTube, so check it out there. Let's go to David Welch right now. He's a Detroit bureau chief. He's a busy person for Bloomberg News. David, we had Mary Barra on from GM, speaking with David Weston earlier this morning. She's not happy. She feels like GM has put a really credible offer on the table, and she's not happy with these labor folks. What's your take on the ground there in Detroit?
Yeah, look, she's very frustrated. And look, historically speaking, she's right. This is a pretty rich offer. What is missing that the union wants are the reinstatement of pensions for workers hired after 2007. That's when the traditional pension and retiree health care for life went away. That was a huge ticket item for the companies and arguably a piece of what drove GM and Chrysler into bankruptcy. It's something management will never want to do. It did have cost of living allowance, which is also important for the union, but they didn't release the details, so that may not give the union enough. There's another aspect of this too, and that is the union's past 2 presidents are in jail. So UAW President Shawn Fain might have had to go on strike to show his members that he's fighting the good fight to get them a good deal, because there's a consensus that the old UAW leadership was on the take from management and not bargaining honestly, and he's got to show them that he's someone different. So there are a lot of factors at play here that are going to probably keep us watching some kind of strike for a while going forward.
I'm surprised he dropped his demands on an increase from 46% to 36%, because it feels like the pay increase is the one thing he can really justify. I mean, Mary was getting $5 million in 2012, and now she's getting $30 million. So clearly, there's room for pay increases. On the other hand, I can't imagine a pension coming back. I mean, that's like really from the 50s. And a 4-day work week also seems like something that's unjustifiable in this country. So are they going to end up just getting a pay rise and maybe cost of living adjustments, and that's that?
You know, look, that would be the logical compromise, right? They get a really good raise, they get cost of living allowances, and you know, maybe they get a better match on their 401k plans. Right now it's only 5%, which frankly is not a very good match. So, you know, if they get those things, that should be the compromise, and it probably would be enough to ratify the deal. And remember, the companies always give these guys big bonus checks just for ratifying it, and they get good profit sharing checks as well. So, you know, that would probably be enough to ratify. The big question is, what is Sean Fain willing to take to the membership for ratification?
Is there
where you get into
yeah, go ahead.
You get into a situation where if he's going to hold out for an even better deal, at a certain point, if the membership's been striking, you know, for in many plants, and they've been striking for weeks, the workers do kind of say, hey, what we're seeing publicly looks like a pretty good deal, and we're tired of walking the picket lines. We're far away from that, though.
Do we have a sense, though? I guess that's kind of the question that one of the questions people have is just, what do you think the relative staying power of each side is? Is there a sense in Detroit that anyone here either side has leverage?
Well, they both have leverage for different reasons. Sean Fain's strategy is interesting. He's only striking 3 plants. They are important plants because they make popular and profitable models. But, you know, he's really only paying strike money to, I think, 12,700 workers right now. And then, you know, so the union can afford to go out for a while. And it's not that many workers who are carrying this burden of walking the picket line and not getting paid and not being able to pay their bills. So the union is extending their staying power by doing this. So it makes it very interesting. It's less damaging to the companies because it's only 3 plants, but this could last quite a while because, you know, they're sort of doing this rolling series of rolling strikes.
David, Mary, when she was talking to David Weston this morning, seemed to suggest it's wrong that electric vehicles are going to require fewer workers. However, I can't understand why you'd need as many employees to put those things together. Does she think maybe they would hire in other parts of the company after they have transitioned to EVs, or what? Because, you know, there's just not as many moving parts.
Mary Barr's been saying this for a while, that she doesn't necessarily buy the idea that it's 30 to 40% fewer workers required. And look, what she's saying is, first of all, they are hiring workers to make the batteries. And one thing she said on Bloomberg TV is that their GM is going to make power units for EVs in their engine and transmission plants. So those workers aren't necessarily going to be displaced. Look, I think over time you probably will lose workers, one, because there are fewer parts, and two, that's kind of always been the case because of productivity gains. That doesn't mean we're going to have wholesale layoffs. So I think that's her point. But I think if you and I are still watching this industry 10 years from now, I think we'll look and we'll probably see, assuming sales are the same for each company, probably fewer workers. But that would have been the case anyways. There was fewer workers than we had 20 years ago too.
David, how much of an advantage does this give to Tesla or, you know, other EV makers in this country, BMW among them, when the big 3 are having to pay, if they give the union what it wants, over $100 an hour all in for factory workers, and Tesla, BMW, Honda, and the others are paying like $50 an hour.
Yeah, look, it's a disadvantage. The other side of the argument is, like, labor is not that big a portion of the cost of a vehicle anymore. But look, if you're paying more for one part of the whole calculus that your competitors aren't, it's a disadvantage. But look, they're making pretty strong profits, and you know, once they get to scale in EVs, they could be making more money on these to the point where they can cover it. But you said I don't think it would be a crippling disadvantage if the agreement stays reasonable, right? If the union would take good pay raises, cost of living adjustments, which are tied to inflation, if the Fed gets control of inflation, it's not that expensive, and a lot of the rest of the stuff is one-time cash payments. Yeah, it's not something that's going to kill them, but yeah, of course it's a disadvantage. Now, look, if they get a pretty good agreement and they can brag, maybe the union, for the first time since I've been around this industry, can actually organize somebody other than the big three plants and their suppliers. You know, they've had no success with the Japanese plants or Korean plants. They've had no success at Tesla. You know, in order for them to even the game, the union's got to actually do its job and start organizing. And they failed at that.
All right. Great stuff, David. Thanks so much for being available. David Welch, he's the Detroit Bureau Chief for Bloomberg News with the latest reporting on the UAW strike of the big three automakers.
Still have a million other questions.
And well, it's going to be going on for a while, so I think we're going to have a chance to ask those questions.
I mean, Carvana is down today and GM is up.
I know.
In the trade. Why is that? Should be the other way around.
It's the whole stock market thing. Who knows what's going on out there? Yeah. All right, let's pivot right now to your favorite time of the week. That is municipal bonds. Focus on Munis is brought to you by Build America Mutual. Build America Mutual insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM insured bonds.
Oh, I
there
missed that.
you go. Joe Misek joins us here in our Bloomberg Interactive Brokers studio. Here's a story on the muni bond space that just jumped out at me because I am a train guy. I'm a train guy twice a day, back and forth to the Jersey Shore. I know my way around trains. Brightline, Florida is starting service to Orlando next week, and that could be a game changer. And I know that's big in the muni space. What's going on down there?
Oh, man, you know, Brightline, this is big for them because, yeah, you know, they were going to Miami, to West Palm, and a little bit up, but Orlando was the real key for them, giving them a long... you know, a longer ride, and eventually they want to bring it around to Tampa.
So this is going to bring, like, the southern Florida folks up to Mickey Mouse.
Yes.
Nice.
And, you know, the airport there, and it's just, this could be something that they're going to do well with. Plus, you know, there were 1.2 million who took the train in 2022.
Where?
You know, in Florida. So,
Really?
I mean, it's not as though this thing is not being used. It's not making money right now.
Okay.
But the Orlando link could be it. This is the thing they're really looking for.
The bonds, I'm looking at the ones due in January 28th. They're trading at 89 cents on the dollar.
You know, that's good for a very speculative project. And, you know, it's the Fortress-backed railroad. Brightline eventually wants to refinance those bonds. And Brightline actually thinks they're going to get an investment grade on new bonds that they sell.
See, there you go.
Yeah.
All right.
Fascinating stuff.
And high speed, 125 miles an hour.
Monorail.
See, now we're
Relatively high
Monorail.
speed.
You've got the Vegas monorail. Now we got in Brightline in Florida. 10-year muni reached its high for the year
That, I
this
think,
week.
is fascinating.
See?
So we've seen yields on the 10-year muni hit a level that some think is the highest it's going to get, and so you buy in to get the capital appreciation.
Well, what many analysts are saying right now is, you know, it doesn't look like the Fed is going to stop. They're going to go up again, but that's probably going to be it in this cycle. So that 292, and maybe it'll go a little higher, that is a pretty good yield. And if you go out even further, which they're saying extend duration, you go out a little further, you're going to get a little more. And, you know, that's going to look pretty good by next year. So they're analysts, almost to the last one we spoke to, are all sort of constructive on the market, if you will. Which is
the yields aren't
surprising.
as high as they were last year, right? I mean, you should have bought in at
4%
last year.
Yeah. And, you know, you could get like 3.5% now on the three month, I think it is, or the 6 month. And analysts are also saying, hey, you know, yeah, you can, but then that runs out, and then you have reinvestment risk in 3 months or 6 months. You're not going to see.
I've been telling you about that, Paul.
I know you have, because I'm ready to jump in on that 2-year Treasury and get 5.03%.
See?
Where's
taxable though?
I know. So I'm a tax-free kind of guy. So where is the money coming in to the muni space? What's going on with the funds flow?
Oh, man. You know, we've had outflows for the last several weeks. And for actually much of this year, we've had outflows. People just don't seem to be convinced. And it's probably going to take a little more, you know, to get them moving on this. The market is the muni market is in a very strange spot right now because that 10-year yield, yeah, it's high, but it's 70% that's 70% of treasuries. So the ratios are expensive. And, you know, people, you know, we had a guy last week, we had a guest come in and people pressed him, you know, well, where's the value? Where are pockets of value in munis? And he was forced to say, you know, everything's pretty fully priced in munis right now.
So our own Eric Kazatsky from Bloomberg Intelligence, you quote him in the story, quote, for an investor in an effective 30% tax bracket, munis make more sense on paper than like-rated corporates. And with munis, you're getting the additional yield due to less liquidity and the idiosyncratic nature of the market.
Especially
when we talk about municipal people like Joe Misek, idiosyncratic.
Eccentric.
That's eccentric. You know, it's not just
the eccentric muni market.
All right. So, what are there any new issues?
But you're like the biggest buyer.
I know.
Are you an eccentric guy?
Not really.
No.
But there's a lot of eccentric people out there. So anything on the new issue calendar that you're looking at that we should focus on here?
You know, it's funny you bring this up. The new issue calendar has a lot of very, how can I put it, almost plain vanilla deals. That whole high yield sector has been quiescent for the longest time. What we have seen sell, you know, in the last several weeks, and more are scheduled, airport bonds. More airport bonds, when you do get a little bit of extra yield there just because of the nutty nature of airports. And really, they're not refinancing, but they're financing new improvements. They're new gates, new runways, things like that. So that's kind of a hopeful sign, if you will, for muni infrastructure.
All right, I'd buy some Port Authority bonds. Why not?
The consolidated revenue?
Yes.
Yes.
Guess what, Joe?
No, that's it.
That's it.
That's it.
Joe Misek, he covers all the munis for Bloomberg News. We get him in here when we can to talk munis, always on a Friday. Great way to end the week. Joe Misek, thanks so much for joining us. Right now, let's go to John Tucker and get a Bloomberg Business Flash.
All right, guys. S&P 500 trimming this week's advance. NASDAQ 100 falling right now over 1%, 1.5%, amid a slide in giants like Amazon and NVIDIA. You have the chip makers. They're sliding on a news report that Taiwan Semiconductor Manufacturing has asked major suppliers to delay shipment of high-end equipment. And traders also weighing a raft of economic data ahead of next week's Federal Reserve decision. You have piles of derivatives contracts that are tied to stocks, index options, and futures scheduled to mature today. So this could lead to a big bout of volatility. S&P 500, 42 points lower. The Dow down 200, the NASDAQ 100, 232 points lower. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're also streaming live on YouTube, so check that out. All right, we talked about one of my favorite asset classes with Joe Misek and munis. Another one of my all-time faves, really since the last 10 years, has been this private credit game.
I love it, too.
I love it, man. And we had this person in a day or two ago. She's more on the syndicated loan side, and I was saying, how much competitors are these guys to you? And she says, they're big. They're big, and they're getting bigger. Randy Schwimmer, co-head of Senior Lending and Senior Managing Director, Churchill Asset Management, joins us. Randy, talk to us about your business, the private credit business. How's it been this year? Are there deals? Because it seems slow, but I don't know in your market. What are you seeing?
So last time I was here, I promised you guys some good news in September, right? Yeah. So post Labor Day, we always wait for the post Labor Day rush. Well, I'm here to report that we have a post Labor Day rush.
Okay.
So let's talk with the public markets right now. So high yield bond market, which was kind of, not very active all year. Rates are very high, issuance low. They had an $11 billion week last week, okay? That's the largest issuance in 2 years. So that's good. So that's waking up. The liquid loan market, which you talked about, broadly syndicated loans, $20 billion so far in September, first 2 weeks. that's more than any full month all year long. So we're starting to see some activity in the public side. Why? Because things are starting to heal, the economy is better, inflation's under control. The other thing that's going on now is as a result, the larger buyouts are starting to come to the market. We haven't seen any of those mega deals this year, going back once the Fed started raising rates. So we now have the 9th largest deal ever since the Great Recession, a company called WorldPay.
Yeah, that's what this other guest was talking to us about.
Yeah, it's being launched this week, $17 billion LBO, $9 billion in financing. That's a big deal. And so the confidence...
How much of that is private credit?
So right now it's not clear. It looks like it's, some of it's going to be in that market, but that's a big number, right?
So that's something you would take a look at?
Yeah, I think it's all about pricing and structure.
Right, okay.
But the fact that a large deal like that's coming out is a big deal. I know one of your all-time favorite restaurant chains, Fogo de Chao, which is, $1 billion deal also coming out. So what's happening now in the large cap market, they're starting to wake up. Now, the direct lending market, our business, has actually been active all year long. If you had said to me back in January, Randy, what do you think the year's going to be like? Just given all this static on rates and inflation, I would have said, boy, we'll be lucky to get to where we were last year. We are now at and perhaps even ahead in some of our businesses of last year, in part because of this flow going from public to private. So, and then I think, our scale now is growing. We have the ability to hold larger deals. And so the result of that is these sponsors, they keep coming back to us we liked what you did the last deal. Let's do it again. We negotiated all the documents. That was a pain in the neck. Let's do just the same document and keep going. The other thing that's adding to the activity is these, and I mentioned this to you last time, the number of acquisitions that the platform businesses are doing in order to grow has significantly increased. So we just looked at the league tables for the quarter. We're the most active lender in direct lending right now for add-on acquisitions.
Churchill Asset Management.
Churchill Asset Management. And we're like the second largest for everything in the traditional direct lending business. So what's happening is our portfolio is actually generating deal flow. It's by just virtue of these are platform companies that are making acquisitions. My wife calls it shopping in your closet. So this is what's happening. The portfolio companies are actually generating deal flow. So we are having a bigger year than we thought. And then in our junior capital business, which is mezzanine debt, co-investive equity, that team is having a significantly better year than last year because of the activity that the sponsors are looking for more equity to put into their deals, because who knows when their next fundraising is going to happen. They have limited capital, so they go to their LP relationships and say, hey, Churchill, how would you like to put in some money into this deal?
It's so interesting that this whole market, that you guys, but also the whole industry, is growing so quickly in the face of rising rates, right? Or is maybe because of rising rates. I was talking with Mark Lifschultz last week from Blue Owl, and he thinks that we're going to see a $10 billion private credit deal, shortly.
Correct. Yeah.
Which would be, now I think the biggest single direct lending deal is like $5 billion, which is already huge.
No question.
Is it because of rising rates that this industry is growing? I mean, why are the banks letting so much of this pie get away?
Yeah, so they've been letting it get away since 1993, right? Because they've been regulated, consolidated out of the leverage lending business, particularly in the middle market. So the deals that you're seeing now are very like corporate-y, double B, triple B, those kinds of things. For the direct lenders, what's happening is everything else is coming our way. All the middle market flow is coming our way. A lot of the sponsors who are trying to get quick executions in this market are trying to get this stuff done. Now, what's driving it? The investors who in a high rate environment are looking for yield right now are looking to private debt. That's what's actually fueling our activity, because the more money that we raise, the more fundraising that happens in our business allows us to scale our platform. The most interesting stat...
So there's just so many more lenders out there. It's not as much about the borrowers necessarily.
It's more the investors who are focusing on the leading lenders like Churchill to dedicate their money to. So there was a survey. I was at a conference last week on a panel. 62% of investors surveyed said they were under-allocated private debt. That blew me away. Like, wait a minute. The three of us have been talking about private debt for a couple of years now, right? You think the message is out there, but because rates are higher and now I can get a 12% yield on a unlevered senior debt investment, out of whether it's Churchill or, some of our other, providers out there. That's a really good number. And so when you compare that to what you can get in the bond market, what's happening is investors are saying, I need to do more, even though I'm maybe allocated right now to private debt, I need to do more. So I feel that's 2/3 of the market saying they're under-allocated in this asset class, and we haven't really gotten going yet. I mean, there's still a lot of runway for us.
So are you guys raising money at the moment currently?
Yeah, we're always raising money.
Is that right?
Yeah, so I'm headed to Scandinavia next week to meet with our clients and potential clients there. Going to Copenhagen, going to Stockholm, and I know your favorite, Helsinki.
Yep.
Never been to Helsinki, so let me know if you got some good restaurants. But when I'm
no, because it's Helsinki.
It's Helsinki. Okay. Do you like fish? Yeah. So I was in the West Coast this week, and I'm telling you, very sophisticated institutional investors are saying, we'd like to talk to you about your platform because we think we need to explore more in the private debt space.
So who's your competition?
Well, it's funny. We don't really have competition. We have collaborators. We have partners that we lend with. So what happens is, since we're an investor in all of the funds with the sponsors that we're financing, we don't lose deals. They'll say, hey, even if, let's say, Blue Owl, perfect example, they say to Mark, hey, we want you to lead this one because, they tell us, Churchill, you led the last two, so we're going to give Mark one. They'll say to Mark, hey, would you please include Churchill in the deal because they're a significant LP investor in our fund? And Mark's saying, okay, fine, we'll give them a little piece. So that makes us sort of invaluable to the sponsors because they know that we're always investing in their funds. And frankly,
you're investing equity into their
funds. And it also makes it invaluable for the other lenders out there because they know they can always count on Churchill for a good transaction to split the deal with them, lead the deal with them. And we frankly, whether we lead or we co-lead with someone, all we really want to do is split the deal 50-50, be able to talk to the economics and terms of the transaction so we control the deal. But other than that, we have a lot of partners out there that we do business with, and we're very happy to do business with them.
All right, so you do a deal. How much do you sell off, and how much do you keep?
We just did a financing right now. It was $500 million hold that we're probably going to sell down to, I'm going to say, like $300 million, something like that.
So you'll still hold $300 of it?
Yeah.
Is that typical? Because at Chase Manhattan Bank, we'd sell down to 15 cents left.
That's why you're not in the business anymore, okay? But what's happening is we have mouths to feed too, right? We have all these investors, and so the more investors that we have, the more we want to spread that wealth out to. And so the more money we raise, now we're going to spread 400 around. Now we do 500. But if you have 40 funds that you're allocating across all 40 funds, the amount of that deal per fund is really small. We don't have any exposure over 2% of the whole portfolio.
What is the default rate? Because people look at these juicy yields and say, sure, I want to get in, but this is floating rate debt, right? So some of your deals previously would have been paying, 6% interest, and now they're paying double that.
Right. So
that's got to be hard for some of the portfolio companies, right?
So because we've been through this before, we pre-model everything as if it's going to be at 12%. So we haven't had the kind of issues. Now the interest coverage has shrunk for sure. We did just a model the other day, and it looks like instead of 4 times coverage, we're like 2.5 times coverage because of that doubling of interest cost.
That's still good.
But, the free cash flows of these companies and the growth of these businesses, I mentioned the add-ons, all of that is helping to grow those companies to accommodate the higher debt. But still, you've got every deal we do, we look at and we say, what's going to happen if rates continue to go up? What's going to happen if we go into a recession? The result is we do only like 5 deals of every 100 that come in the door. Think about that. So I'm turning down 95% of every deal that comes in the door. That's a tough commercial proposition, but the reason that we're successful...
Because you're very picky.
We're very picky, but
You know the people you're lending money to. You're working hand in hand with them.
Yeah, and we don't see 100 deals, we see 1,000 deals. So we do 50 new transactions, 150 add-ons, and with each deal, we're doing more and more per deal. So we'll still do $6 billion or so of volume this year in just senior lending.
Man. What a business!
I want to be in that business.
I know exactly.
What am I doing here?
Exactly.
Randy, I'm gonna pep up my resume and
Please
send it over.
Send it on.
All right, Randy. Thanks so much for joining us. We always appreciate getting some of your time. Randy Schwimmer, he's co-head of senior lending and senior managing director at Churchill Asset Management, and more than anybody else, I think he schooled us
Right. Well, he schools, I think, the industry because he also is the publisher of The Left Lead, which is one of the most popular places to get information on this industry.
Good stuff. All right, let's get a quick check on the market. I don't know who's going to do that.
Tucker's right there.
You're looking right at me. I mean, what?
You seem to be busy with something else.
I give up. S&P 500 close to erasing all this week's gains. Right now, it is down 39 points. That's down 0.9% at 44.65 on the index. You have several semiconductor equipment stocks. They're coming under selling pressure. This comes after Taiwan Semiconductor told suppliers to delay delivery of high-end chip-making equipment because of slack demand. Last year, one of the worst on record for bonds, and now with inflation expectations, seem to be improving. R.J. Gallo at Federated Investment urging investors to take a fresh look at fixed income.
We're much more optimistic that the time for fixed income giving you sort of low single-digit positive returns and acting as a powerful diversifier in your portfolio, that is in fact back. With yields at the highest for the last 12 to 15 years, we think value has been restored.
The two-day Federal Reserve meeting next week, Fed widely expected to keep the funds rate unchanged. Mike McKee, the expert, will be along momentarily to try to explain that one. ARM debuting yesterday after pricing at 51 a share, up 24% the first day of trading. Right now, up 0.75% today. S&P 500 down 37 points, 44.67. That's a decline of 0.8%. Dow Jones Industrial Average 146 points lower. The NASDAQ 100 down 228 points. That is a decline of 1.5%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller and Paul Sweeney here in our Bloomberg Interactive Broker Studio. There is the class of the Big Ten, and that, of course, is the University of Michigan. And they come out with a sentiment indicator, which people really pay attention to.
They're pretty good
at
that.
Okay.
You know?
They're not the Ohio State University.
I mean, we don't care about consumer sentiment at the Ohio State University. We care about football.
That's right. Okay, that makes sense. Michael McKee joins us. He cares about this stuff.
Football, yes.
Yeah, Colorado, the place to be is Boulder.
Well, here's the problem. I went to Colorado State.
I know.
And they're playing.
This is big.
They're playing
so
Colorado.
Let's off the rails just a little bit here, ripping up the script.
And my team has been terrible for years. But now they're the lead story for a week because they're going to get killed by Colorado. And
the ESPN game day is in Boulder. The Fox game day, which is in Boulder. 60 Minutes is doing a story on this. So like everybody who's
it's
anybody,
like Boulder is the epicenter of football,
right? For like 15 minutes. So enjoy your fame there. But it'll be interesting to see. And Michael McKee again, Colorado. They're the Fighting Rams.
Well, they're not fighting, but they're the
Rams. And that's Fort Collins.
That's Fort Collins, which is a lovely city, and every bit as beautiful as Boulder.
But you had no Mork and Mindy.
But we had no Mork and Mindy, and we have not had a good football team in years and years and years.
Yeah, it's just amazing what's happening in Boulder.
However, they do have one of the all-time best NCAA college women volleyball teams.
Really?
So I'm going to give them their due.
Okay, good. Nice. University of Michigan data came out today. What did you make of it, Mike?
It's kind of expected, and you figured that people would be a little bit depressed at the sign of gas prices going up again. It's hard to make too much out of the sentiment part of it because people do tend to keep spending money even when they say things aren't great. What was the most interesting was...
This is the Greenspan quote that I heard you
the Greenspan quote
about.
Was, we watch what they do, not what they say.
Yeah.
But the most interesting, or the most useful information came in the inflation numbers because they went down dramatically. The inflation expectations for 1 year fall to 3.1%, and 5 years fall to 2.7%. Those are the lowest in 2 years since basically before inflation started to rise. So it does tell the Fed that maybe inflation expectations, even with oil prices rising, are essentially still anchored. And
that's interesting because you do see prices at the pump. I mean, John Tucker, what are you looking at right now? $4?
The Wawa on Route 36 in New Jersey, $3.70 this morning.
All right, so not quite.
Which is the
that
definitive
high.
global benchmark, the Wawa.
Well, that's interesting because in New Jersey you can't pump your own, so you don't get the discount.
I still pump my own.
I pump my own.
Yeah,
I would never. Why? When you have the luxury.
Well, the guy's never there. He's always inside the Wawa getting coffee.
All right. In any case, they also use regular unleaded, and most people have to put premium in their cars now. So that's getting close to 4. I'm seeing it over 4.
Well, the national average is basically about $3.90 now.
Yeah. Okay. Yep. And that I would think that leads consumers taking part in the University of Michigan survey to say inflation is starting to heat up again.
Well, what we've seen in the past is that every bump higher in gasoline prices needs a higher bump to have a major effect. People got used to paying $5, so even though they're seeing gas prices go up, they're now seeing them at $3.90. That's still not bad compared to where it was. So the impact seems to be a little bit less. And they've also seen prices go up and prices go down. So I think people aren't figuring that gas prices are going to trip the economy into a wage price kind of spiral.
What's your take on the strike? I mean, that's got to be inflationary on a number of different levels.
It is only if it lasts for a while. The inventories that the automakers have are smaller than they have been historically because they're still trying to rebuild from the pandemic shortages that they had. Once they run out of cars, then you would see prices go up in the same way. It's the same effect as when they didn't have semiconductors. You know, they couldn't make the cars, so people had to pay more. And then you'll see used car prices go up. But this is going to take, 2 months, 3 months, because they do have inventories of a lot of these vehicles. And the difference between now and in the past is we have so many foreign automakers who have plants in the U.S. who are just going to keep going and making stuff. So there are going to be cars available. So it's a little hard to say it's going to be hugely inflationary.
But they don't make pickup trucks, and that's what matters in America, right? So it'll be interesting to see if they strike at the Rouge and the F-150 line gets shut down. That's got to be a problem, I would think, for inflation.
Well, that depends. I mean, do people wait? If they want a 150, are they going to pay up for it right now, or are they going to figure the strike will end and will wait until the price is more reasonable? That's
how much does it
issue.
matter? I mean, the workers are going to. It looks like they're going to get something like 30%. Is that going to go into a wage price spiral?
It shouldn't. What generally happens when you have these big settlements is you get a one-time pop in inflation as the companies adjust to paying and as people spend more money because they have more money. And then it doesn't continue. We got into the 1970s, we got into a situation where it continued and the people raised prices because people got raises. If that doesn't happen, it shouldn't be a long-term problem.
All right, Michael McKee, thank you so much. We appreciate that. Michael McKee does all of our economics here at Bloomberg Television, Bloomberg
still have a lot more
Radio.
Questions to ask him.
I know. Well, it's not like he's going away. It's not like he's going away. We know where to find him. Oh, he's probably going down to D.C. next week for the Fed thing.
Well, there's UNGA up here. Oh, yeah, the Fed. That's his.
I'm very excited to go down to D.C. and miss the UN General Assembly.
Very good.
Here.
All right, I see what you did there. All right, let's switch gears to our C-suite check-in here today with Gina Drosos, CEO of Signet Jewelers. Signet Jewelers trades on New York Stock Exchange, SIG, based in Akron, Ohio. See, Matt, we got you another Ohio company.
I like
it.
So
good stuff. It's got a market cap of $3.4 billion. Stocks up about 12%.
And it's a very car-related town, right? Because isn't that where Goodyear? Yeah,
one of the tire things.
Yeah.
Gina, thanks so much for joining us here. Talk to us about your business here. What are the trends you're seeing so far this year, and what are you telling your shareholders about next year?
Yes, we're seeing some very interesting trends. In the second quarter, we were able to over-deliver our revenue and bottom line guide. And some of the strength that we saw was in lower-priced fashion jewelry. So jewelry under $1,000, almost a back-to-school-like trend, whether you go back to school or not. People often refresh their look at that time of year. And we saw strong sales. That bodes well for jewelry being in the consideration set as people move toward holiday. I think the other really big trend that we've seen is that there has been a lull in engagements. So this year, calendar year 23, engagements are down about 25% versus a typical pre-COVID year. That's a temporary COVID disruption. People usually get engaged 3.25 years after they meet. And 3 years ago, we were in lockdown. And so people were not meeting in the same way. So
well, that's romantic.
Yeah, exactly. So that trough of engagements is happening right now, but we expect it to begin to come back in our fourth quarter. And that provides a 3-year tailwind actually for us, because about 50% of our business is in the bridal category.
So do you care about the Chinese and coming in and buying stuff, or is that really not your business, Chinese consumer, tourists coming into the States? Is that not really your business? Because I know for a lot of the folks here in New York City, they can't wait for the Chinese consumer to come back.
That's not really a big part of our business, so it's not a strong impact one way or the other. What is interesting, though, is that people tend to buy jewelry associated with travel. And one of the things that we talked a lot about on our second quarter earnings call is the proprietary data that we now understand about couples' relationship formation. So we have 45 milestones that we look at that happen from, we went to a movie all the way to we met the parents to we moved in together. And so we can track that. Going on a romantic trip together is one of those milestones. So for our business, it was actually good to see a lot of couples traveling together over the summer, attending a concert together. That kind of thing is good for future engagement ring sales.
How about, I think of class rings.
Yep.
I think of Super Bowl rings. I think of signet rings. And I assume that's where you got your name. Are those things anywhere near as important as engagement rings to you?
Not as important, but it's part of the, customer's journey. I mean, what we try to do is meet customers at the point of market entry to the category, which is usually either getting your ears pierced or buying an engagement ring. And then we try to follow that customer and throughout their life through other milestones like birthdays or graduations or, anniversaries, things like that. So rings itself, fashion rings are a big part of our business. Also, our K banner makes all of the NFL Hall of Fame rings. And our Zales banner makes all of the rings for historically black colleges and universities. And so we have a presence in those special kind of rings as well.
Jenna, talk to us about the cost side of your business. What are the key drivers in your cost structure and kind of where are they moving these days?
Yeah, that's a great story for us. We've really developed a competitive advantage in sourcing. We are vertically integrated. We're one of only a small group of retailers who are site holders with De Beers. So we buy diamonds right from the mine. We own our own cutting and polishing facility in Botswana, in contract with several others in India. And so we have very good visibility into how the prices move of diamonds at different times. What that gives us is an ability to continuously offer customers a great value. And it also is part of our responsible sourcing strategy. We know that all of the gemstones and metals that we sell are sourced in an ethical way and completely conflict-free. That's something customers really care about. So I'm proud that our company can be a leader in that.
How about the cost of gold? Is that not that's what I think of. Of course, the diamond is, I guess, far more valuable than the gold ring that you put it in. But we have seen gold rise up. Right now, we're just under $1,930 a troy ounce.
Yes. So that does matter. What I would say is that while our product contains commodities like gold, like diamonds, it's not a commodity product. And so the retail pricing tends to have less fluctuation than the actual ingredient cost. And we tend to be able to price to cover that. because, when people want a great look, with a gold necklace or a chain or whatever, they are willing to pay to get the high quality that we can provide them. The other thing that we do in a time like this is we bring innovations to the market. So one of the innovations that we have for holiday, the technical name of it is electriform, but think of it like putting gold around a straw, where we have a metal in the inside that we actually can chemically remove like a straw, and so then the gold is just formed around the outside. So you get a very big look for a lot less cost because there's less actual gold in the product. And so innovations like that, we work years out with our vendors to be able to uniquely offer to our customers, so they can get a great value, no matter what the commodity price market looks like.
All right, Janet, thanks so much for joining us. Really appreciate getting some of your time. Janet Drossos, she is the CEO of Signet Jewelers that trades on the New York Stock Exchange. The ticker to load into your Bloomberg terminals, SIG. Appreciate getting some of her time. Let's get a Bloomberg Business Flash right here from our good friend, John Tucker.
All right, Paul and Matt, stocks are lower. S&P 500 down about 0.9%, 38 points lower. But trimming the this week's advance, well, the NASDAQ 100 right now, that is falling 1.5%. Giants like Amazon.com and NVIDIA, they're lower. And you have chip makers sliding. You had this news report that Taiwan Semiconductor Manufacturing has asked major suppliers to delay a shipment of high-end equipment. Traders also weighing a raft of economic data. This comes ahead of next week's Federal Reserve decision. And then you have piles of derivatives contracts tied to stocks, index options, and futures. They're maturing today. That could lead to a big bout of volatility. S&P 500 once again down 0.9%. NASDAQ 100 230 points lower, down 1.5%. And the Dow Jones Industrial Average 180 points lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney here in the Bloomberg Interactive Broker Studio. Just earlier this morning, Matt, I saw this Michael Dean dude walk by our studio, and I'm like, we got to get him in studio. He is the auto analyst for Bloomberg Intelligence based in London, covering all the European auto companies. And Michael, thanks for joining us here. Just Matt and I are emailing as we speak with Kevin Tynan, your counterpart in the U.S. He offered to put my BMW 535i up on a lift, which he has a lift at his house. I don't know what that means, and replace my blown strut. What do I do with a guy like that?
You're making me feel inferior because I don't have a car lift in my garage, so I can't really help. But he's the best person to ask.
But yeah, I mean, so I think Kevin Tynan was shopping for garages and bought one with a house attached to it.
Yes, I
right?
think you're right.
That's the way he thinks about things. You come over here from Europe, where you do an amazing job covering those car makers, and I guess Stellantis we could consider a European car maker more than a U.S. car maker. Although here it's now one of the big three. What do you think of these strikes?
Yeah, it's interesting. So Stellantis is mainly European listed, but it makes over 50% of its profits from the US. So it's going to hurt them.
Almost all from Jeeps, right? And Ram trucks, because it's not really the Dodge Challengers that are driving the bottom line.
Yeah, it's the trucks. And, the market's 80% trucks now in the US. And, it's going to hit them hard. So margins are very good, and that's where they're trying to hurt them.
The Wrangler. So these are targeted strikes. They've hit, I guess, one manufacturing plant at each of the big three. So they're hitting Bronco production for the Ford, which hurts my heart because I love that truck. They're hitting Colorado production for the GM, which is like a smaller version of the pickup truck, so I don't care about it that much. And then they're hitting the Jeep Wrangler, which is, one of the best profit margin drivers for Stellantis.
Yeah, and it's coinciding with the Detroit Motor Show. So there's a lot of publicity behind this. And there's various estimates about how much it's costing them per day. It could be 10, it could be $20 million. But it's going to be significant.
So, we just had the Munich Auto Show, right? Are Europeans, are they gung-ho for EVs over there? Or is this going to be a sell?
Yeah, it's interesting.
Because I feel like it's going to be a sell here.
Well, we're trying to push EVs on consumers whether they want them or not, right?
Right.
Yes, so we actually had our first BI European buyer survey. So this is consumers who want to buy a car over the next 12 months. And surprisingly, or not surprisingly, only 16% of respondents
16 want
to buy a battery electric vehicle. So 44% still want hybrids, and 38% want combustion engines. So that doesn't really tally with what the policymakers want.
Dude, hybrids are so easily the way forward, in my opinion. Now, you drive a fully battery electric vehicle. What's been your experience?
Yeah, no, I love it, but it's got a long enough range that I don't have to worry about recharging it. And the other question...
So you only have to charge up at home, or what?
Yeah, at the moment, so 350 miles range. It does everything I need to. And the main concern over BEVs from our survey was a lack of charging infrastructure. And that's not going to change anytime soon. It's going to need a huge amount of investment. It takes time to install these chargers. Plus, you need to upgrade the electricity grid to power these.
Well, and a close second has to be the price. I mean, I know the exorbitant price that you had to pay for that EV that you've got. It is outrageously expensive.
Prius? Is he driving a Prius?
No.
No? Oh, okay.
It's a slightly more luxurious EV, and it's got a kick. I mean, it's super powerful. I love the BMW iX, right?
Yes.
So it's an amazing vehicle, but it's not affordable.
Yes, that's right. So on average, BEVs in Europe are 50% more than an internal combustion engine. Even more for PHVs, which is plug-in hybrids. So until that changes, and it's not going to change until you get the next generation of platforms coming through with better battery technology, but that's not until 26, 27, maybe 28. So in the meantime, I think you're going to see BEV market share mix in Europe really stagnate.
By the way, my pick for a plug-in hybrid, and this is what I'm ordering now, is a BMW X5, the 50e, because you get the best of both worlds. You get the super refined, iconic BMW inline 6, plus the extra range so that my wife can do chores around town without turning on the motor, and it all comes out to almost 500 horsepower in a gorgeous SUV.
What do you think?
Yeah, it's a good car, but also you could have the Rolls-Royce Ghost, which is a 6.7 litre V12, also a hybrid. It's got a lot of power behind it. It's very refined, so you've got a lot of choice out there.
It's just like a $400,000 delta there between the two. I love the Rolls-Royce Ghost. It's one of my favorite cars of all time. I prefer the previous generation, the non-hybrid version, but yeah.
All right. European automakers, what's their view of China these days? Are they still
Monica
bullish?
Raymond in Berlin wrote a story about Volkswagen earlier this week, which honestly sent chills down my spine. Because she puts forth the competition they face from Tesla on the one side and, the Chinese automakers on the other side, and it seems like Volkswagen just might be doomed.
Yeah, there's two concerns for not just Volkswagen, but all German car makers, because one, about 30% of their pre-tax profit comes from China, and we've got a slowing China economy. And then also the feedback from the Munich car show was it was absolutely dominated by Chinese brands and their new BEVs, which are coming to Europe over the next 6 months. So they've got two threats there. It's not such an issue on the BEV front at the moment because they're pricing them at the same price level as the Germans, but they could easily reduce those prices.
I'm not buying a Chinese car. It's like buying a Hugo back in the day.
A Hugo. Remember that?
Yeah.
But they have good tech, so it's an issue. Maybe with younger buyers,
they'll never be allowed over here. I'll tell you, I bought a car in Germany that was, a very clean emissions car, and I tried to bring it over here, and the customs people said no way. It's got to be at least 25 years old. It's going to take you years to do it.
So I drove the XPeng G9.
The what?
The XPeng G9, and this is the company that Volkswagen's invested 650 million euros into.
Chinese company.
Yeah, it's a Chinese company. It's an SUV. It's a nice car. It's good quality. It's got good tech, and it drives okay.
Can I do a deep tease here?
Go.
While we have Michael in the studio, we're going to talk in about an hour about the car I'm driving this week, and I want to just show you the color. People who are listening, you can stream us live on YouTube. And you can search Bloomberg Radio there and see this vehicle. Now, in my opinion, it's one of the best specs for a 911. It's the Carrera T. It's just absolutely stripped down. It's as analog as Porsche 911 Carreras get these days. But it's like a Barbie purple pink called Ruby Star Neo. Who's buying these colors?
I tell you, Porsche 911 is doing so well. There's a 2-year waiting list. So even if you wanted to buy one, you'd have to wait a few years.
Sorry,
so delivered.
So what are we doing? Are investors buying these auto companies these days? Are the stocks in? Are they out? What are they doing?
There's suddenly a different. Obviously, Tesla's got a big kick on the back of the Morgan Stanley upgrade earlier this week. If you look at the pure German car makers, then they're getting hit on the China concern. But luxury is winning at the moment. So Ferrari, 50 billion valuation. They're going to make 12,000 cars this year. Porsche makes 300,000 cars. It's got a 90 billion valuation. So yeah, luxury is still winning.
So Paul has an issue in that he's put 100,000 miles on his 535i. It has a 6-speed manual transmission that he loves, but unfortunately BMW has abandoned, basically. What can he buy in that range? He doesn't want a Porsche or a Ferrari, right? He wants a Paul Sweeney car that has a manual transmission.
I don't think you can get manual transmissions anymore.
You're out of luck, buddy.
I'm screwed. I'm just going to get an X3, I think.
An X3, but with an automatic transmission.
Yeah, it's done.
You're giving up.
I'm giving up.
The new i5 is very nice.
The new what?
i5.
Yeah, very cool. And then you could switch to electric as well. So the kids would think like, wow, this guy, he's cutting edge. He's avant-garde.
All right, Michael Dean, thanks for coming in here. Michael Dean covers all the European auto companies. We appreciate getting a few minutes of his time with our news in New York City. Here is Michael Barr.
Oh, my. Thanks, Foyt and Petty. We appreciate it. More than 12,000 members of the United Auto Workers walked off the job at midnight. This morning, picket lines are up outside Ford's Michigan assembly plant. A GM plant in Missouri and a Stellantis plant in Ohio are also on strike. Stellantis owns Chrysler, Dodge, and Jeep. UAW President Shawn Fain joined workers on the picket line in Wayne, Michigan.
We're not asking to be millionaires. We're not asking to join the billionaire class. We're asking for our fair share of the fruits of our labor.
General Motors CEO Mary Barra says a strike would hurt the company and employees.
It's the largest increase from a wages perspective in our 115-year history, along with world-class health care benefits and many other provisions, job security, et cetera, and a COLA adjustment. So when you look at the strength of the agreement we have on the table, we really don't need to be here.
Bauer spoke with David Weston on Bloomberg's Balance of Power this morning. This is the first time that all big three automakers have been hit with a strike at the same time. Hunter Biden's defense attorney offered a positive outlook at his prospects for defense. Attorney Lowell insists that the case against his client will, quote, be dismissed before trial. Lowell also told ABC's Good Morning America that prosecutors bent to the will of Republican critics.
The U.S. Attorney's Office has known about this for years. No charges. When they found out about it and made a deal, it was for a diverted agreement. What changed? Not the facts, not the law, but all the politics that have now come into play.
The 3 charges in the indictment dates back to 2018 when President Biden's son bought a weapon despite later acknowledging that he was addicted to drugs at the time. Massive waves from Hurricane Lee along the East Coast are expected by tomorrow afternoon. Lee is expected to move into Canada and make landfall somewhere between New Brunswick and Nova Scotia as a tropical storm. The state of emergency is in effect in Maine this morning. Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Michael Barr, and this is Bloomberg. Paul, Matt.
All right, Michael Barr, thank you so much. We appreciate that. So, Matt, let's just get right back to it. Do I pay a premium? Like, if I get a BMW X3, for example, and I pay a premium, will I pay a premium for the hybrid versus just the ICE?
Yes, you will.
I'm not doing that. There's no incremental value to me. Having a hybrid option.
So there's a couple of things. Number one, you get to signal your values to your neighbors. So you get to say, hey, look at me. I care about climate change, because I have a hybrid vehicle.
Okay.
It doesn't matter, how it was made, how the rare earths were mined, none of that. The other thing is you can, I guess, drive around the short drives. You won't have to use any gas. Okay. So you'd save money in that sense, although you're going to pay a lot more for the hybrid.
Okay, that's not
I really think there's some options that you're overlooking. Like, have you thought about a Ford Mustang?
No. Yeah.
Is that too much of a midlife crisis vehicle?
Yes.
because they're pretty roomy. You've got the stick shift. You don't need 4 doors anymore. You could go with 2, you know?
Maybe I'll just get Kevin Tynan a good bottle of tequila and he'll put the new struts on my car and I'll keep it.
I think that's definitely workable, right?
You've
only got 92,000 miles on your car. I mean, it's good to go for probably another 100 or 2.
Really?
Yeah, I think so.
Remember the days when we were
because you've been taking great care of it, right?
Yeah.
Regular checkups.
Sure.
Using the recommended premium gasoline.
Occasionally.
Avoiding the ethanol.
Yes, exactly. Yeah. All right, looking at these markets here. S&P 500, it is off 0.8%. The NASDAQ off about 1.3%. We'll stay on top of that. We're still waiting for President Biden to make some comments. So when and if that occurs, we will bring that to you. We're going to have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Ed Corey. He's a radio anchor and reporter of Bloomberg Radio. He's at the Detroit Motor Show. Oh, man, they must be talking in the corners there. We'll get the latest on what's happening there. Then Barry Ritholtz Wealth Management. We'll talk to him and see what he wants, what's on top of his mind. He is the host of Masters in Business, a big popular podcast. And then Todd Harrison, founding partner and CIO at CB1 Capital Management, discusses marijuana investing and the outlook for the cannabis industry.
That's going to be cool. Todd Harrison is pretty legendary on Wall Street. He started Minionville, which is a sort of financial media company that won a ton of Emmys. He used to throw this huge party called Festivus for the rest of us that I went to support his Ruby Peck Foundation, a charity, and they had, like, I will never forget this Journey cover band that they had. I thought it was Journey. I thought, oh my God, I'd had a few at that point. But I thought, Todd Harrison has hired Journey. Anyway.
All right, let's kick things off here with Charlie Pellet.
We're looking at a down day here for the Dow, the S&P, NASDAQ, all in the red. Auto stocks are higher right now. Ford shares up 0.6%. General Motors is up 1.4%. Stellantis up by 2% right now. Big story, United Auto Workers beginning a strike against all 3 of the legacy Detroit car makers. An unprecedented move that could launch a costly and protracted showdown over wages and job security. Philip Colmar is a founding partner at MRB Partners, and right here on Bloomberg Markets, he told us the auto strike is a big deal for both wage pressures, and the broader economy.
I mean, even from the big picture perspective, the market's betting on that inflation needs to come lower. So you've got 2 fronts on this. You've got a strike in the auto sector, which is, of course, could ultimately push up some prices in terms of autos, or risk that, which has been a big swing factor on inflation. But more importantly, I think it's an undercurrent of still wage pressures there. And I think that this really matters.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcast. So again, the automakers are higher. Broader market is lower. Stocks are dropping with today's $4 trillion triple witching options event potentially amplifying volatility, and traders weighing a raft of economic data ahead of next week's Federal Reserve decision. S&P down 35, drop there of 0.8%. The Dow down 184, down 0.5%. NASDAQ down 173, a decline of 1.3%. 10-year yield 4.32% right now on the 10-year. We've got the 2-year yielding 5.03%. Spot gold up $16 the ounce to $19.27, up 0.9%. And West Texas Intermediate crude up 0.7%, $90.80 a barrel, holding above 90 on WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Certainly one of the key stories we are following today is the strike by the UAW against the big three automakers. Ed Corey, he's an anchor and reporter for Bloomberg Radio. He is at the Detroit Auto Show, so we can get a little bit of a different view there from the floor. Ed, thanks so much for joining us here. What's the feeling there at the auto show about, day one of this strike?
It's kind of a mixed vibe. The people who are behind the show, promoting it, the people putting the displays together, the people working refreshments and so on, they know that their goal is to continue to push the future, the electric future of the auto industry, show off what's new and try to build some excitement. On the other hand, there is a lot of nervousness about the strike. How long will it last? Auto plants affected, which are very profitable for the automakers. So kind of a mixed bag of emotions here.
In terms of the political fallout, are they expecting, President Biden, who is reportedly going to come out and make a statement on this today, to get behind the unions, as he is, as he proclaims himself the most pro-union president in the history of America, or is he going to try and put a stop to this strike?
Well, we've been hearing from the president that he wants an agreement to be hammered out. He doesn't want the detrimental economic effects that we've all heard about to come to fruition. Now, we're going to see some political action this evening. Here at Huntington Place in Detroit, there will be a charity preview for the auto show. They raise a ton of money for kids' charities in Detroit. Outside, just a block from here, Bernie Sanders will be here with a bunch of UAW members. They will be demonstrating near the UAW Ford Center. So we're going to have that type of, again, mixed feelings about this evening and the strike. And I think it's safe to say that everyone involved wants a quick resolution. But right now, as you've been hearing, there doesn't seem to be one in sight, at least not in the near future.
So, Ed, is there any sense out there of how strong or how together, how cohesive the rank and file are behind this strike?
Oh, in Detroit, there have been union members speaking out, even at plants that are not affected yet by any type of walkout. As you know, selected plants have been picked for strike activity. But even those who are working today said they feel a little nervousness about this. They don't want a lengthy strike. But, the thing you hear over and over again from the rank and file here at Detroit and the area auto factories, they want to go back to where they were. They lost some ground. 2008 was rough. They don't like the fact that some workers doing the same job are making more than others. So they want that parity to be restored. And again, they would like to see a pay increase because they hear and read about the increases that the CEOs have been getting.
That's for sure. And, Ed, David Weston, Bloomberg Television, interviewed Mary Barra of GM earlier today. Boy, she came across, at least to me, as quite upset. I mean, I think she feels that General Motors has put a very credible deal on the table. And I kind of came away from that interview thinking, boy, I don't think the auto guys are going to be, the companies are going to be budging much, at least in the near term.
Well, you might expect that kind of stance maybe, in the initial phase of this strike. The automakers are, trying to maintain the position that they've had. That we came through tough economic times, that there is a bright future ahead. And you heard Mary Barra say that her salary is based on the performance of the company. And the company has earned money, and then just part of her contract, she gets increases too. But the rank and file, the union members say, hey, look, we are a huge part of the success that the company has had. Models are coming in, as new models are coming on the scene, and as we head into an electric future, they want to make sure that they're not going to be behind. They at least want to recoup some of what they believe they've lost over the last few years.
Ed, you've been at the auto show for a couple of days now. I used to go every single year. It was like the biggest event on my calendar. And it has dwindled, right? I mean, back in the day, everybody was at the Detroit Auto Show. It was the most important one for the industry. What's it like this year? And have you seen anything cool?
Well, the good news is it is bigger than last year. Of course, there was, the pandemic when we didn't see any activity. And so, yeah, it is bigger than last year. No, it's not up to pre-pandemic levels, but there's a lot of excitement at the show. I mean, sure, you have the prototypes, the whiz-bang models that may or may not go into production 10 years from now. But models that you can buy, in the very near future are pretty hot here. I mean, Ford is out with a new F-150. There is a Jeep that's coming out, and it's attracting a lot of excitement. And also the Cadillac CT5 has a new look this year, and that's been a very, very popular model. So those big three Detroit automakers with a strong showing of something, people can really check out, and then, put a deposit on or go, order from the automaker too. So there still is some excitement here.
Ed, thanks so much for joining us. Appreciate getting it firsthand and reporting from you. Ed Curry's anchor and reporter for Bloomberg Radio in the great city of Detroit. It is Friday. That means we check in with 1B Ritholtz. Barry Ritholtz, he is the host of Masters in Business.
Wait, I thought we did that on Thursday.
What's that?
I thought we check in with Barry on Thursday.
We switched it to Friday.
Oh, we changed that?
Yeah, sure. We can do it.
Eric, is that like... Oh, just today.
Just for today. Okay. But he's got a day job. He's the chairman and chief investment officer at Ritholtz Wealth Management. Barry, thanks so much for joining us again here. I'd love to just get your view. I know you're not an auto guy per se, but it seems like
he is an auto guy.
Oh, yeah, I meant an auto analyst. You're right. You're a car dude. You're a car dude. I get that. But boy, there's a lot of employees in different groups on strike around this country.
Yeah, it's funny because back in 2021, I wrote a column about how the balance of power during the pandemic had shifted away from capital to labor. And I raised the question, how long is this going to continue? Is this a permanent shift? And what we've seen over the past couple of years is, well, maybe we peaked and it started to come back down. It looks like this strike is a test of exactly where that line is, where the power balance is between the unions and the capital and the automakers.
So what do you think of the demands from the unions, Barry? Because, they did give a sweetheart deal to the big three after the great financial crisis in order to help those car makers get back on their feet. They have done so. The CEOs are all getting double-digit, $20+ million pay packages every year, and the auto workers have gotten bupkis in terms of raises since then. On the other hand, they're asking for defined benefit pensions. They're asking for a 4-day work week. They don't want a tier system anymore. So what do you think of their demands?
So first, they're very substantial demands, 40% increase in hourly pay, 4-day, 32-hour work week, go down the list. In terms of the gap between the average worker and the average CEO, that's not specific to the auto industry. What used to be a 10x relationship or a 7x relationship has just spiraled wildly across all publicly traded companies. So it's not so much the auto workers as it is corporate executives get paid a ton more than the rank and file employees. And it's, anywhere between 50 and 150x. So there is some, hey, what about us? We've been patient for decades. We want regular cost of living adjustments. Defined benefit pensions, those are gone. I mean, the world has shifted to 401ks. That ain't ever coming back. You might be able to get more paid holidays or extended parental leaves, but I just don't see 40% increase is really substantial.
Yep. So, all right, that'll be certainly front burner for the foreseeable future. Barry, let's step back a little bit here. Looking at these markets, what are the themes you're kind of talking to your clients about these days?
So the most important one, the most significant one is clearly the end of the era. We've been talking about this now for a while, that cash is trash. We've been hearing that for forever. In the beginning of end of 21, beginning of 22, we shortened the duration on our bonds because long-dated bonds are much more sensitive to interest rate increases. And we don't play the market timing game. It's really just a matter of, hey, when are you getting paid an appropriate amount to take risks? And just earlier this month, we moved about a third of our fixed income. We extended our duration because, hey, if you can lock in 4.5%, 5%, that's tremendous. That's a real return we haven't seen in just about 20 years for investment grade and treasuries. You can get a little more if you want to go a little further out on the risk curve and go high yield. And we're going to continue to watch when the Fed says they're not sure if they're done. I have to give them the benefit of the doubt. They continue.
We're going to have to cut it short, Barry. Sorry, we have President Biden coming on making comments on the strike. Let's go to Washington, D.C. right now.
Negotiations between the United Auto Workers and the big three auto companies. I've been in touch with both parties since this began over the last few weeks and over the past decade. Auto companies have seen record profits, including the last few years, because of the extraordinary skill and sacrifices of the UAW workers. But those record profits have not been shared fairly, in my view, with those workers. Just as the Treasury Department has released a report pointing out that the most comprehensive report ever dealing with how unions are good for both union workers and non-union workers and the overall economy. Unions raise workers' wages, they said, incomes, increase home ownership, increase retirement savings, increase access to critical benefits like sick leave and child care, and reduce inequality, all of which strengthen our economy for all workers. That's because unions raise standards across the workplaces and entire industries, pushing up wages and strengthening benefits for everyone. That's why strong unions are critical to a growing economy and growing it from the middle out, the bottom up, not the top down. That's especially true as we transition to a clean energy future, which we're in the process of doing. I believe that transition should be fair and a win-win, for auto workers and auto companies. But I also believe the contract agreement must lead to a vibrant, made-in-America future that promotes good, strong, middle-class jobs that workers can raise a family on. Where the UAW remains at the heart of our auto economy, and where the big three companies continue to lead in innovation, excellence, quality, and leadership. Last night, after negotiations broke down, the UAW announced a targeted strike at a few big three auto plants. Let's be clear. No one wants a strike. Say it again. No one wants a strike. But I respect workers' right to use their options under the collective bargaining system. And I understand the workers' frustration. Over generations, auto workers sacrificed so much to keep the industry alive and strong, especially through the economic crisis and the pandemic. Workers deserve a fair share of the benefits they helped create for an enterprise. I do appreciate that the parties have been working around the clock. And when I first called them at the very first day of the negotiations, I said, please stay at the table as long as you can to try to work this out. And they've been around the clock, and the companies have made some significant offers. But I believe they should go further to ensure record corporate profits mean record contracts for the UAW. I'm going to say that again. Record corporate profits, which they have, should be shared by record contracts for the UAW. And just as we're building an economy of the future, we need labor agreements for the future. It's my hope that the parties can return to the negotiation table to forge a win-win agreement. To continue our active engagement, I'm dispatching 2 members of my team to Detroit, Acting Labor Secretary Julie Hsu and White House Senior Advisor Gene Sperling, both of whom have been involved up to now, to offer their full support for the parties in reaching a contract. The bottom line is that auto workers help create America's middle class. They deserve a contract that sustains them in the middle class. So thank you very much. That's all I'm going to say. Thank you.
Mr. President, at what point would you get directly involved in the negotiations? Should Hunter get a part in?
He's just walking right out. So President Biden giving some comments there on the UAW and strike against the big three. Some brief comments saying basically we need to get everybody at the table, and the record profits that have been earned by the companies need to be shared with the rank and file, the employees. And the new economy needs maybe perhaps a new type of labor agreement. So kind of pushing here on behalf of labor to get something done, huh?
Right? Not a very long statement.
No.
And just walks directly out, no Q&A. So it seems like he just did the least that he could do.
Yes.
saying that he, again, has been in touch with people on both sides, emphasized, which I think is interesting, that union workers pushing for more is beneficial to both union workers and non-union workers.
Right, because they draft off of the union contract.
Exactly. So I think that was an interesting point. Also saying that, we shouldn't be surprised to see record contracts, record demands, since the car makers have had record profits. But he did say and repeated that no one wants a strike.
Yep. All right, so we'll have more reporting on that, but we want to bring you those comments from President Biden. Let's reset here, and we'll go get a Bloomberg Business Flash with Charlie Pellet.
Hi, thank you very much. And here's what's going on. Stocks lower across the board right now. The automakers, they are moving higher. Right now, let's begin with Ford. Stock up by 0.5%. GM up 1.2%. And Stellantis, parent of Chrysler and Fiat, among many, many other brands. Stellantis shares up now by just about 2%. Stocks are trading lower across the board, with the S&P 500 index down 36, a drop there of 0.8%. Dow Industrials down 177, a decline of 0.5%. NASDAQ down 176, a drop there of 1.3%. 10-year yield at 4.32%. We've got the 2-year yielding 5.04%. Spot gold up $16 the ounce to $19.27, up by about 0.9%. And West Texas Intermediate crude up 0.7%, 90.81 a barrel on WTI. S&P 500 has almost erased this week's gain, with the NASDAQ 100 index now trading lower by 1.4% amid a slide in giants like Amazon and NVIDIA. Amazon down 2.6%, NVIDIA down now by 2.9%. Again, recapping, the S&P down 36, a drop there of 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks very much. Charlie Pellet there with your Bloomberg Business Flash. Now, I've been looking forward all day to this. We have somewhat of a Wall Street legend joining us right now. Todd Harrison is founding partner and chief investment officer at CB1 Capital Management, but he has spent decades on Wall Street working for the big banks, including Morgan Stanley. He founded a company that I think a lot of us loved very much, Minionville Media, back in the day, which won Emmy Awards. And as I said, he founded the Ruby Peck Foundation for Children's Education, which is an important charity that I think a lot of people on Wall Street like to support as well. Todd, first of all, great to see you. Thanks so much for joining us. Tell us what you're doing now at CB1 Capital Management. What's that business?
I mean, we've been involved in the cannabis space for over a decade now. I actually just uncovered an interview that we did about 10 years ago talking about how cannabis was going to be my single best investment idea for the next decade. And that was actually 9 years ago. And it hasn't been. But recently there's been some news that we think is going to change the space and change the fortunes and really move this in a better direction. But CB1 Capital, we have an investment arm, we have an advisory arm, and we have an advocacy arm where we help Weldon Angeles and Mission Green to get people out of prison for this plant. So it's pretty comprehensive.
It surprises me that pot stocks haven't done better, considering the uptake of the product. I think right now 23 states have legalized recreational marijuana, and you only have to walk around New York City for a few minutes to understand that people are consuming cannabis. Is there a disconnect between the sales, the outlook, and the performance of the stocks?
Certainly. I think it's one of the biggest asymmetric opportunities right now, right here, that I've seen in my 34 years on Wall Street. And why now is very much because of how we got here, right? So because cannabis has been a Schedule I narcotic for so long, and we won't go into that rabbit hole of why. But because of that, the big takeaway is that U.S. cannabis companies can't deduct normal operating expenses. It's called Section 280E of the tax code. So they're being taxed at an effective rate right now of 75 to 80%, and they have been for years, which is why only the best have been able to survive. And the industry was up until 2 weeks ago, really, looking at an extinction event because of the regulatory construct. But as you probably know, the HHS came out 2 weeks ago on Wednesday. It was the last couple of days of summer. I was here, but not many people were. They recommended cannabis go to a Schedule 3, which would importantly remove that 280E tax code. And now we're just waiting on the DEA to codify that opinion. We think that could happen by year end, and then Biden can sign it into law before next year's election. That's just one thing that's happening. Safe banking, we heard last night. It was news broke last night, and it's moving around today or getting out today. That safe banking is going to go through a Senate committee markup. This is the sign or the tell that the Senate's going to pass safe banking for the first time, the upper chamber, and then conceivably be tacked onto a must-pass bill by year end. So there's a few things, right? And if they all happen, this could get really spicy. But just on the math alone, without anything else, if we move to a Schedule 3, if that gets codified, you're talking about a 2 to 3x turn on some of these names just on math.
So explain to us why it's developed this way. 10 years ago, you thought it would be a much better proposition than it has been. What have been the big missteps? What has the industry missed? What has Washington missed over the last decade?
It's interesting. We spent a lot of time in Washington, and they had explained to us that the states are designed to be nimble and the federal government's designed to move slow. And then added, but the thing about the federal government is that when change happens, it tends to happen all at once. But because of the disconnect between state and federal laws, because the politicians have been very slow on the uptake, because cannabis is a complex issue with a lot of stakeholders that have a legitimate claim to participate in the industry, it's really become muddled down in a lot of different cross currents as the illicit market's really proliferated. So, as this comes online and becomes a legal framework, which we just took, again, a seismic shift 2 weeks ago for the first time after a 2.5-year bear market. This is the first domino, and it's a big one. And if the others fall, it can get spicy. But we need this to sort of relax the arbitrage between federal and state law, allow these companies to operate on an even playing field. And after what they've just been through, I would argue that they're pretty lean and mean and ready to go to work.
Todd, if I look across the market, there are a lot of different participants, right? Not just in North America, but mainly, right, in the U.S. and Canada. Are there companies you think that really have got it right? Are there companies you think that are solid, investable, that we should be looking at more closely? And can you tell me some names?
Yeah, of course. And I say this, we have positions, we advise some of these companies, but we got to know a lot of companies very well. Iron sharpens iron during a 2.5-year bear market. This was a 91% drawdown for MSOS, which is the ETF that we advise. But certainly you can learn a lot just by watching how some of these companies did during that trough, as we think it is in front of all these states onboarding on the East Coast. And you look at the Veranos, the TerrAscends, the Green Thumbs, and there's others, right? Glass House in California. As 280E goes away, as the federal government starts to move out of the way, it has to be incremental, the change. And that change, because it's incremental, like we don't have the political wherewithal and capacity to move this to a deschedule where it should be, but Schedule 3 is a stepping stone to descheduling, happens to play right into the MSOs and the publicly traded companies' hands because they still have some of the protections and the barriers to entry and a very regulated market at the state level, but the federal government's moving to really support the 10th Amendment and let the states become the laboratories of democracy and those industries evolve at the state level as the federal framework takes shape. So this is a big, big catalyst. I don't think people really understand it. What's interesting, is that there is a pretty significant structural short in these names, we feel, because of, without getting too far into the weeds, because the U.S. cannabis companies have to list on the Canadian Stock Exchange. They can't list on U.S. stock exchanges, but the MSOS ETF is on the New York Stock Exchange. There's been a pretty pernicious algorithm that's been hitting these stocks down, naked short, we believe, naked shorting these stocks, routing them through Europe, however it may be. But we think they're still there. We think they're still trapped, and we'll see, how that plays out over the time to come. But the other interesting part is all the institutions, and we talked to a lot of these guys. We made a lot of calls after this news, and even the institutions or the funds or the family offices that can buy U.S. cannabis, are telling us, a lot of them are telling us, after so many disappointments, we want to actually see it happen. We want to see this play through. We want to see it get done before we're going to believe it. And I think that's incredibly bullish also.
Todd, given all that background, what types of investments are you making in the space today?
I mean, we mentioned some of them. There's only a handful. There's really only so many tradable names in this space.
But your top, the top holdings in MSOS are Green Thumb, Curaleaf, Verano, TrueLeaf, Cresco. So that's.
Is there anything in the private space you're looking at?
Sure. I mean, just to talk about MSOS, the way that portfolio is constructed is that FANG on one side, that, if you look at Y2K as sort of a preamble of what we're going through, everything they said technology was going to be happened, but not before the tech crash. I think cannabis is at that spot right now. But I think that, the FANG, if you will, those 5 names on one side, and then forgotten, as we say, some of these lower tiered MSOs on the other side, I think are having more beta, because a lot of them were trading at their cash levels a couple of weeks ago because there was no visibility on how they were going to service their debt, on what their cash generation levers were going to be, and that's starting to come into view right now. So both of I think that portfolio is well positioned, MSOS, and again, we're involved. But on the private side, yes, the capital markets have been shut down for a number of years. And I think that, not only for the stocks, but for the research and for the sentiment, this will help close the chasm between the state and the federal sort of discrepancies.
Do you have a view on what the heck has gone wrong in New York State? I mean, it is an absolute mess, right? There's only a few licensed dispensaries here. They only sell a select number of products. The best stuff that everybody wants, the Kana and the Camino products are only in like Empire and then, the million other shops around town that aren't licensed. How did they do such a bad job in New York?
Well, you sound like a consumer, my man. I mean, you just rattled off a couple of brands right there that this is not your first rodeo, I could tell. But New York, I mean, it's a cautionary tale. And listen, well-intentioned, right? I mean, they tried to do the right thing. But what happened was when COVID hit, and again, follow the money. The reason this was coming online in all these states was because the tax revenues are ridiculous, the job creations are ridiculous, and oh, by the way, it's good for you, like as we're finding out more and more. But when COVID hit and the federal government just completely, flushed all these budgets with cash, New York in particular said, we're going to create this framework that we think is just and rights the wrongs of the war on drugs. And like I said, well-intentioned. But anybody that's been around the block a few times knows that you can't legislate wealth, right? And there's a big difference between criminal justice, people shouldn't be in prison for a plant, and social justice, right? They necessarily shouldn't be at the front of the line either. And I think that there's a balance there, and there's we can do this together. I believe that, but New York never really allowed the opportunity. Maryland did it right. Missouri did it right. They levered the medical industry into an adult use industry, and then when they made money, they sort of addressed the social justice issues. New York tried to do that the opposite way. Now you walk down, there's 14,000, 14,000 shops in New York. Most New Yorkers think that's the legal framework, but that's going to transition, right? So it's a process.
I hope so.
Over time, prices will come down. The illicit market will get crowded out. Besides, they're selling pesticides and emulsification agents that are literally poison. So that'll go away, like bathtub gin once went away.
Dude, imagine if you could only buy Brooklyn Lager. Yep. You want a Lagunitas or you want a Sierra Nevada, and they're telling you can't get that at a legal shop.
The social injustice of it all. Todd Harrison, thank you so much for joining us, founding partner and CIO at CB1 Capital Management, talking about the cannabis business. Right now, let's get rolled in national news with Nancy Lyons.
Thanks, Paul. A targeted strike against each of the big 3 automakers now underway after the United Auto Workers Union failed to reach a contract deal with the companies by midnight. President Biden says he's spoken with both sides and knows that companies have made substantial offers, but he says they can do more.
Record corporate profits, which they have, should be shared by record contracts for the UAW. And just as we're building an economy of the future, We need labor agreements for the future.
The UAW is striking at a Ford plant in Michigan, a GM factory in Missouri, and a Stellantis plant in Ohio. Rough seas are expected this weekend along the eastern seaboard as Hurricane Lee makes landfall. Bloomberg meteorologist Rob Carolyn is tracking its path.
It's forecast to become extratropical. That means an ordinary low-pressure system by the time it strikes western Nova Scotia on Saturday. It'll still be a strong storm when it hits Atlantic Canada. The worst conditions across New England expected to be over portions of the Cape and Islands late tonight and on Saturday, and also eastern Maine and those portions of Atlantic Canada along the border, New Brunswick, and also the western half of Nova Scotia.
Bloomberg meteorologist Rob Carolyn, the storm is now packing winds of 80 miles an hour. Donald Trump is denying accusations he asked a Mar-a-Lago staffer to delete security footage sought by federal investigators in his classified documents case. In an interview with NBC's Meet the Press, Trump called the charge false.
When they asked for the tapes, I said, sure, they're my tapes. I could afford them. I didn't even have to give them. Just so you understand, though, we didn't delete anything. Nothing was deleted.
Trump told NBC he would be willing to testify to that under oath. According to a July indictment, though, the Mar-a-Lago maintenance supervisor, Carlos de Oliveira, allegedly asked the property IT director to delete security footage, saying the instructions came from, quote, the boss. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
Connection lost.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We're off session lows, but still a lot of red on the screen with the S&P down 35 on this Friday, down 0.8%. We've got the Dow down 169 points now, a decline of 0.5%. NASDAQ down 162 points, a drop there of just about 1.3%. 10-year yield 4.32% with the 2-year now yielding 5.04%. Spot gold up $15 the ounce to $19.26, a gain of 0.8%. And West Texas Intermediate crude up 0.5%, $90.61 for a barrel of WTI. Stocks lower across the board. Today's $4 trillion triple witching options event potentially amplifying volatility, and traders weighing a raft of economic data ahead of next week's Federal Reserve decision. S&P 500 almost erasing this week's gain. Right now it is on track for a gain of 0.3%. As for the equity market outlook, David Lefkowitz is head of Equities Americas at UBS Financial Services, and he was interviewed this morning on Bloomberg Surveillance.
We think there's more upside if we truly have the soft landing, which is our base case. But I think it's going to take some time to digest some of these changes in the growth and inflation picture.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. United Auto Workers did begin its strike this morning against all three of the legacy Detroit automakers. Shares of all three are higher. Ford up 0.5%. General Motors up 1.1%. Stellantis, the parent of Chrysler and Fiat, among many, many other brands, up now by 2.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks very much. Charlie Pellet there with your Bloomberg Business Flash. Now, let's get to what I'm driving this week.
Yeah, what are you driving?
I just a disclaimer that, the car makers allow me to use these cars to test drive. I've been covering the industry for 20 years now, and so I often get a new car or a truck or a motorcycle to test out. This week, I have something special. And so the purpose of this hit is twofold. Number one, I want to tell our viewers about a product. And number two, I'm trying to convince you to get one of these cars. I'm going to bring in my buddy, Matt Hardigree, to help me do that. He was the editor-in-chief of Jalopnik. He's now working on a site called Autopia, but he's been also in the industry for a couple of decades here covering cars. Matt, it's long been the dream of, I think, every auto journalist to get an absolute stripper of a 911. That is to order the base model with no options at all. And I have almost achieved that in this test ride. It's a Carrera T, which is like already the stripped down version of the 911. It only has the essentials, the things you need, like a short throw shifter. And it has almost no options on it. I absolutely love it. With one exception, and that is the color.
I love the color. You look great in it.
I don't know, Matt, you probably can't see it, but maybe you've seen, the color is called Ruby Star Neo. It's like a purple pink, like a Barbie pink.
You mean it's the best color. You got the best color, and you're complaining about it.
My daughter thinks so as well, but give me your thoughts first off on the Carrera T, the 911 Carrera T.
It's great. I mean, I think what Porsche has done is realized that as with a lot of things in life, the more options, the better, and the more money they can get. And, for an enthusiast, I am not likely to buy a 911 Turbo. It's a little pricey, but if I'm in a 911 range, they have created something that fits between the true base Carrera and the Carrera S, and they call it the Carrera T. And somehow, by creating a cheaper version of the Carrera S, they've made it more desirable than a Carrera S. They are selling at pretty high levels for people I've spoken to. And the problem is, even though it's the stripper version, it's a little bit faster than the base Carrera. I did one myself. I built one before the show, and I was like, it starts at 130. That's such a great price. I'm only going to add a couple of options. And you get on the Porsche personalization page, and then you're like, well, I need hardwood yellow seatbelts. I definitely need to have the special brown. I like it in brown, the special brown color. I need this, I need that. And then all of a sudden it's you're $140,000 into a car. So it's genius. I think it's genius. You got it with the manual. Who cares what color it is? As long as it has a manual, that is the right car to get.
Well, and that's the beauty of this. So the base model Carrera, the absolute cheapest one you could get, doesn't have the manual as an option. You have to get the PDK.
Oh, please.
Which is a very amazing automatic transmission, but it's still an automatic transmission. And Matt, the benefit the T has over the Carrera S, I was talking with Luke Van de Zandy, who runs PR for the 911 at Porsche in the US. He told me you can't get the short throw shifter on the S. You have to go up a level to the GTS to get that. And that, to me, has been the revelation with this car. You know, I had a Carrera S, 991 Carrera S.
Sure.
And I had never thought about changing out the stick. This little stick is so much better than the big stick. I don't like a big stick. I like a little stick.
Who does?
You know? The other revelation for me with this car is the cloth seats are amazing. I've never preferred cloth over leather. And these are just, I'd rather have them. So I feel like it's an opportunity for Paul Sweeney to get a new car and save a little bit of money because he's not buying the Turbo S.
100%. It's a great deal, Paul.
All right.
I think you would be silly not to buy it at this point.
Hey, Matt, how about you like Matt are a car guy, and you're at the high end here. I can't imagine the Ferraris, the Lamborghinis, the Porsches of the world, they're going electric willingly. Are they scratching and clawing to remain in the ICE world?
No. If you look at, especially in Germany, there's been a big push with the EU regulations coming up. Theoretically, that in a decade, we're going to have essentially no gas-powered cars. To get that legislation through Brussels, basically the Germans said, specifically Porsche and Volkswagen said, you know what, e-fuels, give us an exception for carbon neutral e-fuels, because no matter what, even if they build electric cars, even if they sell primarily electric cars, no one I've talked to at Ferrari, no one I've talked to at Porsche has given up on a gas-powered car, because for a sports car, even though an electric car might be faster, nothing just sounds, and I love driving electric sports cars, nothing sounds right. You don't get that feel of a short throw shifter. Like you need that visceral reaction, because that's what you're paying for. You're not paying to get somewhere faster. You're paying to get somewhere with more excitement, with more joy.
That's this car definitely fits that bill. I mean, it isn't the fastest car on the road. It doesn't feel as quick as my Carrera S, and it doesn't have as much horsepower. It's 379 horsepower. My Carrera had, I think, 400, and now the Carrera S has probably 430. But it's got that build-up. It's got that the gradual acceleration and the sound from the sport exhaust is just amazing that I absolutely love. Plus, it only weighs like 3,100 pounds. So that's incredibly light. By the way, maybe you can help Paul out with his conundrum. Veering away from the 911 for a moment. He has the last manual 5 Series. He has the 2014 535i with a stick. And now he's worried that it's going to start getting old and he's going to have to make repairs. Should he get something else, or should he just make the repairs and keep the car that he loves the most?
He should get rid of it and give it to me, because I have a 2003 5 Series 530i with the 5-speed, and it has 235,000 miles on it.
235,000 miles.
235. Look, it's 2014. It's a little sketchy. You're on the edge where the car is so modern that sometimes fixing things becomes cost prohibitive.
Yep.
But you're just on the right side of the edge. I think you can make this car last, and it's not like mine. Mine is like Legos. You can pop something out, you can pop something in, and you can generally fix the car. Your car isn't Legos. Unfortunately, it's Lego Technic. It's a little bit more advanced, but no, you're never going to find, this is the problem. You're never going to find something new that feels as good as that car, because they can't make cars like that anymore. So either put it on Bring a Trailer and regret it for the rest of your life, or spend $2,000 or $3,000 a year with your mechanic getting it. I think that's the best move. Got to keep the car, or give it to me. Also,
or give it to me. Exactly. That could be an option. All right, Matt. Thanks so much for joining us. Lots for me to think about over the weekend. Matt Hardigree, he's a publisher of the Autopian. And talking cars with Matt Miller. Matt Miller driving the Barbie pink Porsche Carrera T.
Love it. I have to give it back, unfortunately. I only had it for a week. But I joined the Autopian. Oh. So I get that membership, I think, for a whole year. And plus, they're going to send me like a velvet T-shirt.
Oh, cool. Very good. And I'll tell you, the Bloomberg Courtyard is a great place to kind of showcase cars. It looks cool.
Yeah.
I mean, you could rent that out, maybe make a couple of bucks, whoever owns this place. All right, we're going to have more coming up. This is Bloomberg. Let's get to Steve Rappaport. He's got some company news for us.
Paul, shares of General Motors, Ford, and Stellantis are up as the United Auto Workers are on strike at some plants. Negotiations broke down last night for new contracts. GM CEO Mary Barra tells Bloomberg Radio the company's offer to the union is more than fair.
I'm extremely disappointed and frustrated that we're even on a strike. We didn't need to get here. General Motors has an exceptionally strong offer on the table. It's historic. It's the largest increase from a wages perspective in our 115-year history, along with world-class health care benefits and many other provisions, job security, et cetera, and a COLA adjustment. So when you look at the strength of the agreement we have on the table, we really don't need to be here.
Barra adding GM is capable of weathering the storm. Disney Plus is heading for the minus column. More on that from Bloomberg's Steve Potisk.
Disney has bet streaming is its future, but Bloomberg has learned the company expects to fall tens of millions of subscribers short of its previous up to 245 million target for Disney Plus next year. Price hikes and the failure to land cricket rights in India have cut into growth.
Thanks, Steve. Disney stock is up less than 1%. And WhatsApp users could find some new messages in their chats from advertisers. The Financial Times reports teams at Meta are floating the idea of showing ads in lists of conversations on the chat screen. Sources also tell the Times Meta is deliberating whether to charge a subscription to use the app without ads. Insiders, though, are against the move, and WhatsApp chief Will Cathcart denies that report. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
There's a lot of car talk today. Matt Miller, Paul Sweeney, live in the Bloomberg Interactive Brokers studio here, streaming live on YouTube. Red on the screen here today. The S&P 500 off 0.8%. The NASDAQ feeling a little bit more on the chin, off about 1.1%. The VIX popping up here. We're now at 13.45. I'll quote that for Tom Keene. I know he's listening. Yields up just slightly, about 4 basis points on the 10-year. We're trading 4.32% and 5.04% on that 2-year. Lifting once again, WTI crude oil up about 0.7%, $90.77. So we've got some movement there. Right now, let's head down to Washington, D.C. We'll get some world and national news with Nancy Lyon.
Thanks, Paul. President Biden believes the big three automakers could improve their offers to the United Auto Workers who went on strike at midnight. He says they need to pass along their record profits to the rank and file. He also vowed to help settle their differences.
I'm dispatching 2 members of my team to Detroit to offer their full support for the parties in reaching a contract.
Biden says he respects workers' rights to use their options under the collective bargaining system, and he understands their frustrations. And he says the companies, while they have made some significant offers, could go further. President Biden's son, Hunter, has been hit with new federal charges of purchasing a firearm without disclosing that he was using drugs. Brown University political scientist Wendy Schiller says this could have an unexpected political benefit for the president, and especially if his son is convicted.
It's possible Hunter Biden does jail time. And the sad thing for the Biden family is that would be good politically for President Biden because his son would have been subject to the justice system the way everybody else.
At the same time, Wendy Schiller at Brown says this could diminish the charges against former President Trump if voters equate those with the ones against Hunter Biden. Jets quarterback Aaron Rodgers is recovering from surgery to repair a torn Achilles tendon that he suffered in this week's Monday Night Football game. Dr. Spencer Stein with NYU Langone Health believes Rodgers will be back next year.
Generally, I would say that 1-year recovery is about average, and it being his left foot, I think that gives him a good chance of being able to return potentially at the beginning of next season.
Stein says Rodgers will likely return at a high level, similar to his pre-injury status. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Matt.
Hey, Nancy Lyons, thanks so much. We appreciate that. You know, we talked with some retailers recently, Matt, and talking about that issue that we're hearing more and more about, which is shrink. That's like stuff just getting ripped out of the stores in many cases. And there's a good story on the Bloomberg terminal. Apparently, it's a big, big thing out in L.A. It took just 2 minutes for more than 20 thieves clad in hoods and masks to swarm the Nordstrom store in the Westfield Topanga Shopping Center and make off with $300,000 of handbags and other luxury items. A security guard was blasted in the face with bear spray, according to the Los Angeles Police Department, which dubbed it a flash rob.
That's like a play on the term flash mob.
I think so.
You know, when you show up and you dance, but instead these guys are just bagging
this is
stuff.
big. I mean, it came just days after at least 30 suspects stole more than $400,000 of merchandise from a Yves Saint Laurent store at a mall in the Los Angeles suburb of Glendale. Just amazing, the stuff that's happening out there. And it looks like it's organized. And it's really stepping
absolutely
up.
organized.
Big
it's
time.
not like 30 thieves
Exactly.
just show up on
Hey,
the
let's
scene
do
and all
this.
steal stuff together
But people
randomly.
people are organizing these people and they're financing them, and it's a big deal. And, you know, it's got to the point now where Governor Newsom of California has got to take action. He awarded $267 million in grants to 55 local agencies to combat the crimes, with the money slated for better surveillance technology and also to target criminals in blitz operations across the state. It's a big deal.
It is, but I just wonder what you're going to do about it. I mean, it's not like
well, you're putting armed guards in school. Can't you put an armed guard?
What's an armed guard going to do? He's going to shoot somebody?
I don't know. What are they going to do in a school? I mean, I hate this.
I think it's more likely that you shoot somebody who comes into school with a gun than someone who comes into a Bloomingdale's with no weapon.
Right.
Right. Just 30 of his buddies, and even if you arrest them, there's 30 more behind them because this is organized crime.
Yeah, it is. It looks, and it's a big deal.
It's not just some gangs on the street. It's organized.
Yep. All right, sound on with Joe Matthew. That starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? It's the economy, stupid. Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
16 days to a shutdown, but the strike is already on. Welcome to the fastest show in politics as the United Auto Workers make it official and make history while they're at it, striking all three of the big three automakers at the same time for the first time. And the president just spoke. We'll have that for you and get the latest on the strike from Bloomberg Auto reporter Keith Naughton. And we'll get insights today from Congressman Jim Costa, the Democrat from California, joins. He just returned from Kyiv and will weigh in on the debate over the budget. With that in mind, we'll talk shutdown politics and the campaign trail with our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. So let's get rolling on a Friday with Charlie Pellet and a look at Wall Street. Hey, Charlie.
Well, hello there, Joe Matthews. Stocks lower across the board. Auto stocks, specifically GM, Ford, and Stellantis, they're all higher right now, right to the numbers. GM up by 0.8%. Strike is on. We've got Ford shares up 0.4%. Stellantis, the parent company of Chrysler and Fiat, and that stock up now by 2.4%. UAW did begin a strike this morning against all three of the legacy Detroit car makers, an unprecedented move that could launch a costly and protracted showdown over wages and job security. And yes, a topic we will be exploring right here on Sound On. Here's where we stand in terms of markets. S&P down 38 right now, a drop of 0.8%. Dow Jones Industrial Average down 196, a decline there of 0.6%. And NASDAQ down 164, a decline of 1.1%. 10-year yield 4.32% with a 2-year 5.03%. Spot gold up $14 the ounce to $19.25, up by about 0.8%. And West Texas Intermediate crude oil holding above $90 a barrel, $90.66 right now on West Texas Intermediate crude. That is a gain of just about 0.6%. General Motors CEO Mary Barra was interviewed on Bloomberg Radio this morning, and she says GM is well prepared to weather the strike.
I will say we're ready for this. You know, as we've dealt with COVID and dealt with the semiconductor shortage, as well as other supply chain challenges that have, continued to persist from COVID. Our team knows how to manage these situations. They're staying agile, and we're going to do what's right for the company. We're going to make sure everyone stays safe. But this is a strike that didn't need to happen.
And you can hear more on that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Grocery delivery business Instacart is preparing to price its IPO on Monday after boosting its price range following that strong trading debut by ARM Holdings. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Right, Charlie, thank you. Welcome to the Friday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where all the talk today is about Detroit after it actually happened last night. As you've been hearing throughout the morning here, throughout the day on Bloomberg, the UAW decided to strike all three. So we're 3 up and 3 down here, and the president did speak about it. This story has advanced since we woke up this morning. The headline on the terminal: Biden presses automakers to reach a deal, sends officials to talks. Here he is from the White House a short time ago.
It's my hope that the parties can return to the negotiation table to forge a win-win agreement. To continue our active engagement, I'm dispatching 2 members of my team to Detroit, Acting Labor Secretary Julie Hsu and White House Senior Advisor Gene Sperling, both of whom have been involved up to now, to offer their full support for the parties in reaching a contract.
Will it make a difference? We don't know yet, but we do want to get the latest on this and get a sense of the scale of this strike with Keith Naughton, Bloomberg Auto reporter, joins us now with the latest. And Keith, I know it's been a busy day for you. We appreciate it. We have to be clear that this is not, I guess, a full strike in the technical sense. It's roughly 15% of production at these companies. Is that how you see it?
Yeah, it's just under 13,000 workers.
and there are a total of 150,000 workers represented by the UAW at the three companies. So it is just a fraction. It's just the start, sort of a skirmish, not a full-on war quite yet.
Give us a sense, Keith, of what's happening where all the other workers are today, where they're actually going to work. What's it like inside a GM, Ford plant when you've got some of your union brothers and sisters out on the picket line today? Is it business as usual?
Well, that's what the UAW told those workers to do at the, if you will, the unstruck plants. They said, keep working.
Yeah.
There was not a contract extension, so they are currently working without a contract, but they're supposed to keep working. There could, though, be a knock-on effect from these three plants that have gone down. It could start affecting, the engine plants that supply them and the transmission plants that supply them, and then the suppliers that supply those downstream. So, the longer this goes, the more dominoes will fall.
So this could become a much bigger strike at some point. The president says he's dispatching the acting labor secretary along with Gene Sperling to Detroit. We knew that Gene Sperling was already talking with them. I might have even assumed that he was already in Detroit. Will the arrival of these two officials make any difference?
He's the president of the United States. The bully pulpit has some power, but it's different than, for example, the railroad near strike of earlier this year that the president actually did have some legislative authority to intervene in. This is completely private industry here, so they can go, they can cajole, they can pressure, but it really is down to the companies and the union to resolve this.
I know that the unions did not ask for help. They were adamant about that. I mean, what role will they play? It clearly won't be a formal mediation role. Are they there to be available if needed? What's their posture in these talks?
Well, they provide a direct line to the White House, and that accounts for something. And so, I do think that that Biden, he calls himself the most labor-friendly president ever. His statement came out clearly side of the UAW. So Biden is really pushing the companies to sort of at least meet halfway with the union. They're kind of a very wide divide yet. The latest wage increase offered by GM and Ford is 20%, and the union is asking for 36%. So there's a big chasm to bridge.
That's true, and Sean Fain has made clear that this is not just about wages. He said, you can double our pay right now, and that's not going to be enough. So, Keith, how much of this has to do with pensions, retirement?
Yeah, well, that's another big ask from the union. They want to return to traditional pensions, something companies really don't do much of anymore, and the automakers in particular don't want to go that route because that's not how any of their competitors provide retirement income for their workers. It's really a 401k world now. So that'll be a very hard get. It does seem like there's some movement on the cost of living adjustment. The companies are offering that, which is a return to old times on that one as well. It's something that the union gave up earlier in this century. But right now there's a dispute over what the formula should be. The union doesn't think the formula is generous enough.
Are they going to continue talking? Are there sessions scheduled here, Keith, or are we going into a dark period?
Well, it looks like today is going to be devoted to picketing and rallies. The union has a big rally coming later this afternoon with Bernie Sanders and other dignitaries. But the hope would be that they'll return to the table this weekend.
I appreciate the time. Keith Naughton, Bloomberg auto reporter, who's probably been an awfully busy guy lately. Keith, thank you for your expertise and your great reporting as we add the voice now of Congressman Jim Costa, the Democrat from California, 21st District. Think Fresno is joining us now on a Friday. Congressman, it's good to see you, and I appreciate your time. Mary Barra spoke to us earlier, the CEO at GM, and said this strike should never have happened. Do you agree?
Well, given our economic recovery, certainly the last thing we need is to have a strike with our major automotive companies in this country. But clearly, we hope that the president's efforts with others will sooner than later bring this strike to a successful resolution for all parties.
What's your concern here about a potential economic impact, if any? You seem hopeful that this will be short-lived, but some have suggested this could be weeks, not days, including the president's former labor advisor. If we start stretching into October, for instance, and I'm going to ask you next about a possible shutdown, there could be corrosive effects here that impact the economy nationally, right?
Well, that's certainly a possibility. We hope not, and that's why resolving this strike among the parties sooner than later is so important. And I think that the president's comments this morning and his sending his labor secretary along with Gene Sperling to sit down with the parties to determine how we can bring this to a successful resolution. I mean, we've had strikes before, certainly in this country, and it's certainly organized labor's right to do that, to represent working men and women in this country who do so much to bring about this economic recovery that we are enjoying at this point in time, but we need to continue. And clearly, a prolonged strike is not in the interest of that economic recovery.
Well, I'm sure you've heard it's being called the hot labor summer, right? We've had the dock workers, we've had UPS, we've had Yellow. They haven't all turned out the same way, and now we have an historic auto workers strike. Do you worry about the impression here, as Joe Biden claims to be the most union-friendly administration in American history, the impression that Democrats are not always aligned with workers here, that in fact, in many cases, the rank and file poll a little leaning toward Republicans more, while the leadership is obviously striking a chord with Democrats and endorsing Democratic candidates for president and Congress. Do you worry about a shift, though, in organized labor leaning toward the Republican Party?
Well, I think that it's not what you say, but what you do. And I think that President Biden's actions as supporting working men and women, which has always been a strong foundation of his political efforts over the years, going back to the United States Senate. I think when it's all said and done, you look at the Inflation Reduction Act, you look at the bipartisan infrastructure package, all of those have provided funding that create jobs, good paying jobs here in America. And certainly the strike that was resolved, the longshoremen here on the West Coast, that was a result of the 5-year contract coming due, and the problems that we've had with supply chain issues, was a successful resolution to the men and women working here on the West Coast that are so critical to our America's exports. And I hope the same resolution is going to come about with this auto strike that we're witnessing at this time. And I know that the president is focused laser-like to ensure that we bring the parties together and we ensure that working men and women and these jobs that are so critical here in America stay here in America.
Spending time with Congressman Jim Costa, the Democrat from California, joining us here on Bloomberg Sound On. Our analysts at Bloomberg Economics, Congressman, were estimating that a protracted auto strike here, we'll say weeks, not days again, coupled with a government shutdown, would mean the difference between a recession and not a recession. And I wonder your thoughts, having just been back in Washington for a week here and some of the drama that we've heard about in the House. A lot of folks are expecting a shutdown, and some of that might hinge on funding for Ukraine. I know I'm coming at you with a lot here. You just came back from Kyiv, and I'm sure you have very strong feelings about this supplementary budget request that the president is asking right now of the U.S. House. Is Ukraine potentially going to be the reason why the government shuts down?
No, I don't believe so. I think that there are a group of congressional extremists, some call them terrorists, who simply have required the speaker to meet a list of demands for their votes to avoid a government shutdown. But I was talking with a number of my Republican colleagues over the last 2 days on the floor, and they're frustrated because they really believe, and I believe as well,
that these list of demands that are being represented by this MAGA extreme group, even if they were to succeed, they wouldn't vote for the budget anyway. They want to shut down government. They want to eliminate the FBI. They're extremists, period. And so it's a very difficult situation with a small margin. And I have never voted to shut down government in the 19 years that I've been in Congress. It's irresponsible, regardless of which party is in power and who occupies the White House, just as not lifting the debt ceiling is irresponsible. The Speaker was able to successfully negotiate that back in the springtime with the President, with an agreement on 2-year caps on spending and work requirements, and we need to keep that agreement. And that's part of the basis for this year's ultimate budget resolution, I believe. But we're not in a place where we can reach a budget resolution between the House and the Senate with the October 1 deadline looming. Therefore, a continuing resolution is absolutely critical. And whether or not we're successful next week in the first effort remains to be seen. There is, I think, for many of us, doubts that they're going to be able to put together what would, I suspect, be just a partisan vote with maybe 4 votes to spare to pass it through the House. And if that's not successful, we could well have a government shutdown. But I think, as you discussed, the supplemental appropriation for Ukraine is separate, but there are those that are trying to link it with the concurrent resolution. And I think
not to mention defense spending across the board. I know the Pentagon has been a sticking point here, Congressman. I don't mean to interrupt you, but you used some pretty spicy language there, referring to some of these members as terrorists. Kevin McCarthy is your colleague representing a different district in California. Is he capable of controlling what you describe as terrorists in his party?
Well, Speaker McCarthy is not only, he's my neighbor, and I've known Kevin for 30 years. This is a tough challenge that he's facing, and he was able to successfully deal with the debt ceiling earlier this year, and I wish him every possible success in passing a concurrent resolution so that in October and November we can ultimately resolve the differences on a bipartisan basis between the House and the Senate before the end of the year. But we have to pass this concurrent resolution, and we have to do everything possible to avoid a government shutdown for all the reasons that I indicated. But he's got a tough challenge he's facing with some of the most extreme elements in his caucus, his conference.
Well, Congressman, I want to welcome you back to Bloomberg again. Let's stay in touch on this. We'd love to have you come in studio and talk more about your visit to Ukraine. Thanks for being with us, Congressman Jim Costa of California. I'm Joe Matthew. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long at Bloomberg. Another leg lower. Lows of the day right now, and the S&P has given up its weekly gain. Right now, we've got the S&P down 51 points, back below 4,500, 44.53 right now on the S&P. A drop now of 1.1%. Again, lows of the session with the Dow down 288 points, now down 0.8%. And NASDAQ is down 222 points, a decline of 1.6%. Tech giants like Amazon and Nvidia are selling off. Amazon down 2.9%. Nvidia lower now by 3.3%. Adobe after earnings down 4.8%. Traders are weighing the impacts of the strike that hit Detroit automakers. They're also sifting through a raft of economic data ahead of next week's Federal Reserve decision. UAW beginning that strike this morning against all three of the legacy Detroit car makers. California Congressman Jim Costa was interviewed about the strike moments ago right here on Sound On.
Given our economic recovery, certainly the last thing we need is to have a strike with our major automotive companies in this country. But clearly, we hope that the president's efforts with others will sooner than later bring this strike to a successful resolution for all parties.
And you can hear more of that conversation on the Sound On podcast. You can download it wherever you get your podcasts. Automaker shares are trading mixed right now. General Motors is up 0.7%. Ford turning negative, down 0.1%, and Stellantis is up by 2.1%. Again, recapping stocks lower, S&P down 53, a drop there of 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
First time it's ever happened. The UAW striking all three of the big three at once. Sean Fain made the announcement late last night.
We're calling on GM, Wentzville Assembly, Local 2250 in Region 4 to stand up and strike. We're calling on Stellantis, Toledo Assembly Complex, Local 12 in Region 2B to stand up and strike. And we're calling on Ford, Michigan Assembly Plant, Final Assembly and Paint only, Local 900 in Region 1A to stand up and strike.
The word from the CEO at GM heard earlier on Bloomberg in a conversation with our own David West and Mary Barra. This is clearly not good news.
I'm extremely disappointed and frustrated that we're even on a strike. We didn't need to get here. General Motors has an exceptionally strong offer on the table. It's historic. It's the largest increase from a wages perspective in our 115-year history, along with world-class health care benefits and many other provisions, job security, et cetera, and a COLA adjustment.
But of course, as we discussed earlier with Keith Naughton, our auto reporter at Bloomberg, they're a mile apart on a lot of issues, including pensions and retirement. Let's assemble our panel for their take. Rick Davis, Bloomberg Politics contributor, along with Jeannie Shanzano, Bloomberg Politics contributor. Happy Friday to both of you. This is not really a surprise. Everyone knew that it was coming. It feels a little different when it actually happens, though. Jeannie, I wonder your take on Joe Biden's response here. He's sending the acting labor secretary to Detroit along with Gene Sperling in the hopes of finding some kind of a breakthrough, I guess. But I'll point you to what else Mary Barra said today. This is her conversation with Bloomberg. She said, frankly, when you put it up, when you have a strike and we're not making vehicles, you start to put jobs at risk. It's an historic transformation, referring to the EVs. How long can this go on before union workers start regretting this strike, before jobs are lost, Jeannie?
Yeah, I mean, the risks for Biden are very real. Obviously, the risks for the workers on the ground are very real. I think that we are looking forward, unfortunately, to probably what might be a longer strike than anybody would hope. And I think the president is trying to do what he can. I mean, this is one of the situations where he doesn't have any direct role. There's nothing he can do to force a negotiated settlement, but he can use the power of the bully pulpit. And there are plenty of risks for the president out there. We saw the Chamber of Commerce come out very strongly and talk about the impact. We know this will impact Michigan's economy first and foremost. And of course, without Michigan's 16 electoral votes, President Biden wouldn't be President Biden today. So there's a lot riding on this for him. And more than that, of course, this is a president who has long said he is a friend, the best friend the unions have ever had. And he is determined to try to grow this economy in favor of the lower, the middle class, as he talks about from the bottom up. So there's a lot riding on this for him. But I think his statement today was very good, and he is sending the right people out there to bring these parties together as best he can.
Rick, Jeannie points to a statement from the Chamber of Commerce, and I want everyone to know we're going to be talking with Neil Bradley from the Chamber here in studio in just about a half hour's time. It reads, quote, "The UAW strike, and indeed the summer of strikes, is the natural result of the Biden administration's whole-of-government approach to promoting unionization at all costs." I could keep reading. The statement does not get more positive for the president. Rick, does this blow back on Joe Biden immediately? Republican candidates for president are already saying it's his fault.
Yeah, I mean, shocker. The Chamber of Commerce is attacking Joe Biden on his union support. Yeah, no, I mean, you would expect this, right? And if anything, I've been surprised that the Chamber hasn't been more vocal in an attempt to get back into the good graces of the House Republicans by really pinging on this. But they have a tricky place to be, because a lot of Republicans are now looking to say, you know, like, how do we get those union voters? You look at Donald Trump reaching out directly to union voters this week to say, hey, you know, these Democrats can't help you. Come along with us. We'll bash those corporations. And by the way, what is the underlying aspect of this that's being missed by most of the media? And that is the union workers are deathly afraid of the EV and the trend toward that, because the biggest company in that category, Tesla, is non-union, and they're doing just fine. In fact, their market capitalization is much better than all these companies that they're protesting now. And so what in the world are these union guys thinking the future is? Oh, we're going to hold back the EV revolution in cars, you know, so that we can protect ourselves and get a pension in the process? Pensions were washed out years ago because the people managing them couldn't actually keep track of the needs of the pensioners, and they were underwater. I mean, like, this union, it sounds like it's going back to the 1950s in their approach to negotiating with companies. They want $100 billion in concessions, and these companies don't have a market cap that's that high. I mean, like, honestly, I think the level setting of this is going to happen this weekend, and it'll be interesting to see with this stand-up strike strategy where only, 3 locations are affected, whether that's enough to empower the UAW to get the kinds of concessions they're looking for. But I really wonder whether these car companies can afford to have these unions.
I'm compelled by this conversation, Jeannie, about unionized workers, whether it's auto workers or otherwise, warming up to the Republican Party. An opportunity here for Republicans on the campaign trail. I asked Congressman Costa about that a short time ago, a Democrat from California, and he said, look at our actions, not at our words. But how much will Democrats be at risk of losing this important block of voters? I know the membership is low, but they count on these endorsements.
Yeah, the endorsements are important. As we look at the latest Gallup poll, you still find support strongest among Democrats, less so amongst independents, and then certainly least among Republicans. But to your point, it is growing. Republicans should be vying for the support of these workers. That's the way our system works. But let's be realistic here, and I agree with the representative on this. It is going to be a question of who delivers for these workers, and that's exactly what the Biden campaign was talking about yesterday. That's what they're going to keep talking about, which is this idea, look at what we have done for workers and let's compare that to what the Republicans have put forward policy-wise. We saw the memo from Anita Dunn, and she laid out many of those statistics there. That's very real. And just as one example of that, and I'm struck by Rick talking about Elon Musk and Tesla, because of course, just this morning when they went on strike, targeted strike, albeit, what did Elon Musk do in Twitter? He unverified the UAW. So this is somebody who on the one side of his mouth talks about out publicly as if he is something populist. And as an owner of Twitter or X now, he unverifies the union because it goes on targeted strike, because to Rick's point, he also owns Tesla, which is not a unionized car business or company. Wow. And then when he was criticized for that and it's pointed out, he plops that verification right back. And workers are not immune to or unclear about this kind of hypocrisy coming out. So I think that's something important to keep in mind in this conversation as well.
Wow, here I just thought they failed to pay their $8, Jeannie. Rick, I've got less than a minute here. I can't. Does the Labor Secretary, does Gene Sperling provide any breakthrough here? Can they make a difference this weekend?
You know, look, I mean, it'll be interesting to see what their instructions are, right? Yeah, I agree with previous speakers on this program saying it's a good thing that the White House has representatives, you know, in and out of the room. And I think that Gene Sperling and Julie Hsu are the perfect two to send. They have different appeals and can help. But it's not totally clear to me, like, what is their mission? Are they going to tell the UAW leaders that their asks are too high and they got to come down to get a deal done? Are they going to muscle the companies to, you know, adjust the COLA so that it's something that's in line? I mean, it's not totally clear, and they are smart enough to be agile and successful, but having the impact of having the White House there has got to be positive if they're there, you know, with instructions to don't come home if you don't have a deal by Monday kind of thing.
Well, we're going to turn next to the other potential cloud hanging over this administration and the Capitol, of course, and that's a potential government shutdown. More to report on even since we spoke yesterday. We'll have that next with Rick and Jeannie. Right now, an update on world and Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. As you've been talking about, it's a first-of-a-kind strike against all three Detroit automakers. Close to 13,000 of the United Auto Workers' 150,000 members are off the job at one plant each for Ford, General Motors, and Stellantis. UAW President Shawn Fain is picketing with the Ford workers in Wayne, Michigan.
We're not asking to be millionaires. We're not asking to join the billionaire class. We're asking for our fair share of the fruits of our labor.
Fain says the automakers are refusing to share the wealth. Company leaders say they have been generous. American consumers appear to be breathing a sigh of relief when it comes to inflation. Bloomberg's Irv Chapman has more on a new survey.
A year ago, those polled by the University of Michigan feared inflation soaring. Survey director Joanne Su said in a Bloomberg interview, they no longer do.
So consumers have absolutely noticed that the slowdown in inflation has stalled a bit, and that's part of the reason why consumers aren't feeling great with their sentiment this month. But at the same time, they do expect the slowdown in inflation to continue.
Who said COVID, political polarization, and other uncertainties have added to pessimism about how those polled feel about the economy and the country. In Washington, Irv Chapman, Bloomberg Radio.
Global news, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all in the red. In fact, the S&P 500 index is trading very close to session lows. Slight bounce off the bottom, but still looking at a drop right now of 1.1% on the S&P. That index has wiped out this week's gain. The NASDAQ 100 index is underperforming, down now by 1.7% as tech giants like Amazon and NVIDIA sell off. We've got NVIDIA down now by 3.3%, Amazon lower by 2.7%. Stocks lower across the board. Right now, a 260-point drop in the Dow, down by about 0.7%. S&P down 49, down 1.1%. NASDAQ, the composite index, down now by 1.6%. 10-year yield, 4.31%. The 2-year, 5.02%. Spot gold up $13 the ounce to $19.24, up 0.7%. And West Texas Intermediate crude now at $90.64 barrel, up by about 0.5%. A prolonged strike at GM, Ford, and Chrysler maker Stellantis could have a severe impact on America's economy. And with that story, here's Bloomberg's Vinny Del Giudice.
The auto industry accounts for roughly 3% of U.S. economic activity. The strike's immediate impact will be in states where automakers play a major role: Michigan, Ohio, and Indiana. If the walkout drags on, it will be felt nationwide. Here's GM Chief Mary Barra.
For every job that General Motors has, there's 6 more jobs in the economy that depend on us running.
The union says the strike marks the first time it's hit all the big 3 at the same time. Vinny Del Giudice, Bloomberg Radio.
Day 2 of trading for chip designer ARM Holdings, and the stock is gaining again today, up another 0.4%. Recapping stocks lower, S&P down 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
So we've got 2 weeks to figure this out, how to keep the government from shutting down. And we are no closer to a solution today than we were yesterday, certainly. A lot of concerns about the debate around defense spending in the House. Trouble is that debate can't start because a small number of Republican hardliners in the Freedom Caucus blocked that from happening this week, and there's just no path. Realizing a lot of this comes up to the last minute, but people are starting to get nervous 2 weeks away because this time does feel a bit different. As Libby Cantrill told us a couple of weeks back, the ingredients to this shutdown are more harrowing than they have been in recent history, potentially more poisonous. Congresswoman Katie Porter, Democrat from California, taking aim at Speaker McCarthy in a hearing on Capitol Hill before leaving town.
We have 16 days until the government shuts down. Speaker McCarthy, who is slow-walking government funding bills one by one, has only passed 1 of 12. I'm a former professor, so I know what 1 of 12 means. The speaker's getting an F.
The speaker's getting an F, she says. Let's bring the panel back in. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. Is that fair, Rick? How would you grade Speaker McCarthy?
Nah, he's a man on the run. I mean, he had some of the most tumultuous meetings this week with his own caucus, a lot of 4-letter words being thrown back and forth at each other, and no really apparent progress other than the fact that now he's talking about, like, well, maybe we ought to be working on a minibus and there's a way to package together some budget items. And so you can tell he's scrambling to find something that he can get people to rally around rather than how he started the week earlier, which is telling everybody, if you don't want to get a spending bill passed, throw me out. Get rid of me as speaker because I'm going to get one done.
Apparently, there are a number of Republicans in the House who are pretty upset about the way this is going when it comes to defense spending. Jeannie Politico reporting this morning that Hal Rogers and Dave Joyce, the Republican from Ohio, are pushing McCarthy to bring it to the floor instead of getting bogged down in the deal-making at the committee level, dealing with the Freedom Caucus. Is there something to this? Should Speaker McCarthy start calling bluffs?
I think he's going to have to. I mean, I don't see another way out. At this point, if we think about what we are all sort of hoping for, a best case scenario in all of this is a CR. It's a heck of a way to budget. You'd never do it in your home. And yet this is where we are in the U.S. Congress. He is completely beholden to this far right of his caucus. He made this deal. This was in the works in January. We don't know what's in the deal, except that he has very little room to maneuver. So I think he's got to bring this to the floor. I'm not sure if he'll be successful at that, but this is where we are today. And I think, what Kevin McCarthy thought he was going to do is sort of throw the far right of the Freedom Caucus a bone by opening this impeachment inquiry into Joe Biden. And they did call his bluff by saying that, okay, we'll take that. And now we're still going to hold your feet to the fire. You can't operate a caucus this way. Kevin McCarthy is in a similar boat to his predecessors, Paul Ryan and John Boehner. And he is going to either have to figure out a way to get them to move forward with the basics of governing, which is to pass a budget and keep the government open, or he is going to have to step out of the way. The problem for the entire caucus is there's nobody there to pick up the slack, because who would want to be speaker at this point?
Rick, as we discussed earlier with Congressman Costa, funding for Ukraine is a big sticking point here when you have any conversation about defense spending, certainly the multi-billion-dollar supplemental request that President Biden has made of this Congress. We've just learned, and it's a headline on the terminal right now, that Volodymyr Zelensky will be at the White House on Thursday. We knew there were reports he was going to be here next week. We can actually put a day on it this following, of course, the United Nations General Assembly meeting. Well, having the president of Ukraine back in town, and I'm sure he's going to visit Capitol Hill as well, have any impact on the debate that we're hearing now?
Absolutely. I mean, he's the best advocate that Ukraine has ever had. His speeches to Congress and Congresses all over the world, in allied group nations, has been part and parcel with the selling of their defense of their homeland against Russian aggression. And you can't count him out. He's an impressive figure who can articulate the importance of the battle that he's fighting for the rest of the world. And so he'll start the week in New York at the General Assembly and make a big splash there. And I think that's the kind of momentum that this cause constantly has to be thinking about. And it's very conscious on the part of Zelensky's regime to keep the world focused on Ukraine. And so by his physical presence, by just going to Washington and being with Biden and seeing members of Congress, reminds them every single day that these are real people who are shedding blood and treasure, to fight the Russians on all of our behalf. So I think it's a savvy move. I'm not surprised. They've been smart about how to sell this war. And I think it will result in a lot of Republicans who have been sort of stucking up to Putin in the House of Representatives to shut up for a couple weeks, and that may be the opening they need.
As only Rick Davis could say, Jeannie, he addressed a joint session of Congress. It was December. I actually had to look back. It wasn't this year, the very end of last, right before Christmas. That was arguably the high watermark for support here in Washington. Remembering the Ukrainian flags lining Pennsylvania Avenue alongside the Stars and Stripes. Could this visit bring us back to that level of support?
I think it can. And that is the real danger here, because we've all seen the polls as support, particularly on the Republican side, has started to diminish. And it is not that Americans, Republicans, or Democrats don't support Ukraine's cause, but that they are concerned about the amount of spending. So that's really what's got to be addressed here. And, the reality is Republicans in the House today, this is where they find themselves, with a caucus that is going to be, to Rick's point, cheerleading for Putin, not supporting funding for Ukraine, trying to impeach the president on flimsy evidence, and of course shutting down the government. It's no place for the party to be, and the president is going to make the most of that. So that's the danger for those Democrats where I am in New York who won, or Republicans rather, who won in Biden districts. They are living in fear that their caucus has gone amok, and that it is so magnetized at this point that they can't win in these districts anymore.
Jeannie Shanzano and Rick Davis. I'm Joe Matthew in Washington. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Apple's new iPhone 15 Pro quickly saw initial delivery times slip well into November as the new flagship device went on sale for pre-orders today, suggesting strong demand for the most expensive iPhone models. Apple, meanwhile, planning an iPhone 12 update to address a French radiation issue. Bloomberg's Denise Pellegrini explains.
Charlie, this move comes after French regulators ordered the company to stop selling the model because it emits electromagnetic radiation levels that exceed European Union standards. Now, Apple insists the 12 model is safe and says the phones have been certified in countries around the world since its introduction in 2020. And it says the problem raised by the French government agency that manages wireless communications frequencies is related to a specific testing protocol. The French ban could have extended to all 27 EU countries after 3 months if Apple had refused to issue updates and if no other government objected. And Charlie, I should also mention, Apple is already phasing out the iPhone 12. It debuted in 2020. It stopped selling it after it announced its iPhone 15 line on Tuesday.
And that's Denise Pellegrini reporting. We do have Apple shares trading lower now by about 0.9%. Home purchases across the U.S. are getting canceled at the highest rate in almost a year as rising borrowing costs weigh on buyers. Lennar among home builders trading lower today by 3.3%. And those are our top company stories at this hour. And this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington, where Kaylee Lyons will join the conversation in just a moment. We're going to sit down with Neil Bradley from the U.S. Chamber of Commerce. Out with some strong words today about Joe Biden in the wake of this auto strike actually beginning. That's straight ahead, just about 5 minutes from now. First, world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Ukrainian President Volodymyr Zelensky will meet with President Biden at the White House next Thursday to express his need for additional aid. This will be Zelensky's third White House visit. He's coming to Washington after attending a United Nations meeting. National Security Advisor Jake Sullivan says Zelensky will provide an update on his country's offensive and the need for more support.
I think he's looking forward to the opportunity not just to see President Biden here at the White House, but also to see congressional leaders from both parties to make the case that the United States has been a great friend and partner to Ukraine throughout this entire brutal war, and that the United States should continue to do that.
Sullivan says the visit is crucial as Congress considers President Biden's proposal to approve an additional $20 billion in aid to Ukraine. Elon Musk's decision not to extend Starlink satellite service to help a Ukrainian attack is now getting a Senate review. We get more from Bloomberg's Nathan Hager.
The Senate Armed Services Committee is looking into the national security implications of that decision from Starlink's parent company, SpaceX. In a statement, Democratic Chairman Jack Reed says neither Elon Musk nor any private citizen can have the last word on U.S. national security. Along with operating Starlink, SpaceX is a major U.S. contractor. It launches spy satellites for the Defense Department. This week, Musk told a podcast he would have extended Starlink for the Ukrainians if President Biden had directed him to, but no directive of that sort came. In Washington, I'm Nathan Hager, Bloomberg Radio.
One American and two Russian space crew members are arriving this afternoon at the International Space Station. They lifted off earlier today from Kazakhstan. They were supposed to fly to the space station last spring, but their original capsule was needed as a replacement for another crew. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
Hi, Nancy. Thank you. I always get a kick out of politicians who refer to themselves in the third person, or anyone for that matter. You know, Bob Dole thinks Bob Dole is going to win. Donald Trump does it too. He's always talking about Trump said this, Trump did that, the Trump brand. But it goes even further when you're referring to your alter ego as a different person, right? Enter Dark Brandon, which we've talked about quite a bit. President Biden out today with a new video to try to sell a Dark Brandon, a color-changing Dark Brandon mug. Picture the president. Here's the mug. He's pouring hot water into it as if he's making tea.
I think you should buy this mug. I'll ask you nicely, but he won't.
It's so weird. So you see the picture of Biden with the glasses, and the eyes turn red when you pour hot liquid into the mug. I'll ask you nicely, but he won't. Jeannie Shanzano, help me out here. Is this normal for someone, or namely a president, to be referring to their alter ego like this? Is this working again for Joe Biden?
I think it's working, Joe. I have the most boring coffee mug. I want a Dark Brandon one. I love it. Kudos to the team for putting this together. And Joe, I want to know who your alter ego is, because we're going to start referring to you in the third person.
Okay. Well, all right, we'll talk about that off the air. Rick, would you buy one just for a souvenir? It could be a collector's item.
Yeah, I love the way the eyes turn red. I mean, it's not just, like a color changing, it's color changing evil red. I can't remember a candidate having a alter ego. So this is all new to me. I'm digging it.
And you were on the Dole campaign. You know about.
And that's Bob Dole, but he didn't actually have an alter ego. It was him.
It's just him, exactly. All right, Joe Matthews going to say goodbye to the panel now. Rick Davis and Jeannie Shanzano, love you guys. Happy Friday. Thanks for another great week of analysis. You will only hear them here on Bloomberg. Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? It's the economy, stupid. Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
The auto strike is on. Welcome to Hour 2 of Sound On. As the United Auto Workers walk out on the Big Three, President Biden dispatches officials to Detroit, and we are joined this hour by Neil Bradley at the U.S. Chamber of Commerce, which is calling out the Biden administration for making this happen. Later, countdown to the shutdown. We'll spend some time with Bloomberg Politics reporter Mike Dorning, who will help to bring us inside the budget standoff on Capitol Hill. And we'll be joined later on by Bloomberg's David Weston, who actually spoke today with General Motors CEO Mary Barra for Bloomberg Wall Street Week. So let's get to it, as always, with a look at Wall Street. Midday trading now with Charlie Pellet. Hey, Charlie.
Thank you very much, Joe Matthews. Stocks lower across the board. Interestingly, though, auto stocks are advancing for the most part. Ford shares, they're a little changed, but higher by less than 0.1%. Stellantis up now by 2.2%. GM shares, they're up by 1.2%. President Biden, you heard him here on Bloomberg, urging Detroit's Big Three legacy automakers to offer more concessions to the UAW in order to end a strike that threatens the American economy, saying he will send 2 members of his team to Detroit to engage both sides. Stocks are trading lower across the board on this Friday, now looking at a weekly loss for the S&P 500 index. The S&P is now down by 1.1%, down 50 points now. We've got the Dow down 267, a drop there of 0.8%. The NASDAQ Composite Index is down 222, a decline of 1.6%. 10-year yield at 4.30% with a 2-year that's yielding 5.01%. Spot gold up $13 the ounce to $19.24, up 0.7%. And West Texas Intermediate crude oil up 0.5%, $90.62 for a barrel of WTI. So bottom line here, West Texas Intermediate crude holding above $90. We've got Jim Bianco, the president of Bianco Research, telling us he sees crude prices moving higher.
I think the price of oil is going to keep going up. The price of gasoline is going to keep going up. And the final thing is, I think we're ways away from demand destruction. We're at $3.87 a gallon nationally in the U.S. I don't think it's $4 that's going to start demand destruction. I think it's much, much higher, and that will first foster into much higher inflation before we start talking about demand destruction.
And you can hear more of that conversation on the Surveillance podcast. Adobe shares are lower after the software company reported third quarter results that beat expectations. It also delivered an outlook that analysts saw as conservative. Adobe down by 4.9%. Recapping stocks lower, S&P down 51, a drop right now of 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you and welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington, joined now by Kaylee Lines. It's great to see you, Kaylee, around this time yesterday. We thought there would be a strike.
Yeah.
It's different when you actually hear it. Mm-hmm. And this is historic. It's the first time, all 3 of the Big Three.
Yeah, unprecedented. Granted, this isn't all 150,000 workers in the United Auto Workers Union walking out at once. They are being very specific about where they are striking on 3 specific facilities that produce high-profit vehicles, only about 13,000 workers at this moment. The concern, though, is the longer this drags on, the more it's going to ramp up.
Rick Davis was just saying they're going to level this up over the weekend, and it's going to start looking real ugly when we walk into next week. We'll see if that actually happens. The president, though, did talk about this. Remember, we were asking everybody yesterday, does a strike prompt a presidential address? It does. He didn't have a lot to say, but a few moments from the White House. They are sending help, is the message. Here he is.
It's my hope that the parties can return to the negotiation table to forge a win-win agreement. To continue our active engagement, I'm dispatching 2 members of my team to Detroit, Acting Labor Secretary Julie Hsu and White House Senior Advisor Gene Sperling, both of whom have been involved up to now, to offer their full support for the parties in reaching a contract.
We'll see if they can make a difference. Of course, Gene Sperling's already been in touch with them, and that has not made a difference.
Right. The UAW hasn't been super eager to engage with the White House on this. Maybe now that they're actually striking, things will change. But what else the president said from the Roosevelt Room today I thought was very interesting. He talked about record corporate profits and how that should mean a record contract for the UAW. If there was any real question that the president was going to come down on the side of the union, he definitely tried to squash that this afternoon.
Meanwhile, Mary Barra says, the longer you're gone here, fewer vehicles are made, could mean fewer jobs. And there's a real push and pull here. One of the first emails I woke up to this morning was from you with the statement from the chamber. And it's a ripper. Quote, the UAW strike, and indeed summer of strikes, is the natural result of the Biden administration's whole-of-government approach to promoting unionization at all costs. It goes on from there. Pretty tough language for a president who is trying to be the most union-friendly in American history.
Absolutely. Should we talk to the chamber about it?
Absolutely. Look who's at the table. Neil Bradley, Executive Vice President, Chief Policy Officer, Head of Strategic Advocacy, 3 business cards in one at the U.S. Chamber. Neil, it's been a while, and it's good to see you. Thank you for coming in.
Great to see you.
We've
Thanks for
talked
having
a
me.
lot about this from the UAW's perspective. We heard earlier from Mary Barra, but I'd like to hear your thoughts on this hot labor summer and what has brought us to this moment. Union membership is near a record low, but we're looking at a potentially economic disrupting event here.
We are, and let me start where you did. Let's talk about union membership. In the private sector, 94% of the workforce is non-unionized. Yet this 6%, and even a subset of that, with the strikes at the UAW, the strikes that we're seeing in Hollywood right now, and the over 200 strikes that we've already seen this year, are really causing havoc, not just for the overall community, but for lots of businesses that end up being collateral damage in these fights. And so, at the chamber, one of the things that we're most concerned about are those small restaurants, the dry cleaners, the service stores, who their employee base, their customer base, are the people on strike or the businesses that are shut down because of these strikes. And what concerns us the most is that no one's thinking about what happens to them.
Well, I understand that point, Neil, but the counterpoint would be, when you're thinking about the economic ramifications of a strike, is the economic reasons we are at this point in the first place, that these workers have been dealing with inflation that no one saw coming. Wages haven't necessarily kept pace. And in order for them to keep consuming, to keep visiting those shops, keep paying for what they need, they need more money. What do you say to that argument?
Absolutely, and that's why in this particular instance, the auto companies came forward with pay raises, in some cases 20% plus. Understand that 20% pay increase is a pretty good pay increase, but the unions want 40%, and the unions want 5 days of pay for 4 days of work. Hey, listen, that sounds great, except it's really hard to operate a business and keep offering people jobs when you're demanding these type of concessions that are really just going to put those businesses into bankruptcy. And so, there are people throwing around a lot of numbers here, but when you look at just the scale of what they're asking for, I think you kind of get a sense of why they were demands that these companies couldn't meet, and why now, today, we're facing this strike.
Of course, Sean Fain would tell you that's because it has been so long since we've been able to renegotiate. When you wait a decade and the world changes around you and they're seeing technology change around them, he says, we're tired of living off the scraps. Neil, can you relate with that?
Well,
can you sympathize with that?
Absolutely. And listen, unions play an important role, even though they're a small part of the workforce. They play an important role, and so we want healthy union management negotiations. We want to get deals, but I think what we look at and what really concerns us is that we've kind of reached a point in which both public policy and a lot of the narrative around unionization is really trying to tip the scales. And in tipping the scale to distort that balance, you're going to create the type of disruptions, the type of unfeasible, over-the-top demands that we're seeing right now play out in this UAW strike.
Well, to continue the conversation on disruptions, economic disruptions that may have resulted in this moment, this is something that Mohammed Al-Arian, who is an economist and a Bloomberg opinion columnist as well, was talking about earlier on Bloomberg. Let's just listen for a moment to what he had to say about how we got here.
When you have a combination of a tight labor market on the one hand and workers being hit by an unanticipated bout of inflation, you normally get catch-up wage negotiations. If you're a UAW worker, if not now, when? This is your key point of bargaining power. Your bargaining power is going to erode over time. So if you're going to strike, now is the time to strike.
So he's saying now the time is the time to strike for the UAW. But I wonder how much it is the concern of the Chamber of U.S. Businesses that this is contagious almost, that it's not just the UAW that is dealing with this issue of wages wanting to be higher because of inflation, that this is going to have ripple effects across the wider economy of people demanding more. And that's when we talk about a wage price spiral. Is that a real risk, or is this, idiosyncratic to the auto sector?
It's not idiosyncratic. It is a real risk. And by the way, wages are going up for unionized and non-unionized workers, and they need to go up, right? For the very reasons that Mohammed just talked about, equilibrium in the labor force, inflation. This is not a situation in which people are objecting to increases in wages. In some cases, what are really high increases in wages, given our experience over the last 20 years. But there are natural limits to this. And I think the thing that concerns us is that in many cases, labor today feels empowered by supportive government policies that say no demand, no matter how high, is out of bounds. And so when you look at our response to this strike, it's not just the particulars of the UAW and the negotiations with the Detroit Three. It really is about this broader policy push to put the thumb on the scale in favor of labor and unionizations in a way that leads to the wage price spikes talked about that will be devastating economically for all of us. And so there are contagions that can occur here, even though we're talking about one strike in one industry.
The conversation about economic impacts grows a lot worse when you add a government shutdown. The combination of an auto strike that we have now, especially if it goes into a longer duration, and a shutdown, according to Bloomberg Economics, is the difference between a recession and not a recession. What's the Chamber's message to some House Republicans who are in fact urging a shutdown right now for leverage?
Well, our message to them is the same as been to parties, Republicans and Democrats, in the three previous times over the last decade that we've had shutdowns instigated by both parties, is that a shutdown is a choice, and it's a really dumb choice to make. Right? So this doesn't have to happen. This is a question of elected officials deciding that they would rather shut down the government as a means of achieving leverage to advance their policy proposals. But the history is unanimous. Anytime someone does that, they are unsuccessful in achieving their policy objectives. And in the meantime, the shutdown has real-world implications. It's not just government employees who are furloughed and what that means. Think about all the businesses in America who need permits, who need government inspections, who need export licenses to be able to operate. Guess what? When the government shut down, you can't do any of those things. So it's really amazing that we could be in a position in just a few short weeks where our elected representatives would literally choose to make the government non-functioning, shut it down, and you really can't have a functioning economy if you don't have a functioning government.
There's still 2 weeks to keep this from happening.
There is.
Yeah, but fewer legislative days. And judging by how this past week went, seems like progress is going to be quite slow on this.
It's not a good week in that direction.
Yeah. What we've heard, though, consistently from economists and others on this program here on Bloomberg Television is that a shutdown is nothing like a potential default, which was the risk we were dealing with months ago in the debt ceiling debate that was also about spending that no one wants to stick to that deal anymore. So is that just the wrong way to be thinking about this?
Well, they are very different. And a default on the debt, which has never happened before. We've had shutdowns, too many of them, but we've had them. A default on the debt would be unprecedented and cataclysmic. Like you would just
right. And so by comparison, you could understand how a lawmaker says, well, at least this wouldn't be that. Right?
Right. But, like I could amputate my arm or I could amputate a finger. A finger is less than the arm.
You got 10 of those.
But we don't need to do this, right? We don't have to go through this. And, yes, I get the economic arguments that mandatory spending continues. And when we reopen the government, coffers get backfilled. What can't get backfilled is time. You can't reclaim time. And what gets lost for the American business community is the time and the economic activity where you needed the government to be a partner. And when you called them up, no one answered the phone to give you that permit, to help you get that project licensed, because somebody decided to shut it down. You can never make that up. And that has real implications for a lot of industries in America who have to have the government as a partner.
When the chamber calls the Speaker's office, is there an answer? Do you have back channels with the Speaker right now to deliver that message?
We have relationships on both sides of the aisle, leadership and rank and file, and even with the White House. And so that doesn't mean that people always agree.
From the business community, though.
They are all hearing from the business community. And listen, the Speaker's been great on this. He's been very clear. He doesn't want to shut down. The remarks that leaked out of the conference meeting this week, he was describing it in terms more colorful than we are about.
You can go there if you want.
The negative consequences
we'll
of a shutdown. A lot of bleeps, but he's right on. And listen, that's because he's been there. He had a front row seat at the 2013 shutdown, the last one in 2018. He understands that no one wins in a shutdown, and in particular, it's really hard for the leveraging party to win. And so I don't think this is of the Speaker's doing. I think he understands what's at stake, and he's really trying to find a solution and a way forward.
So as we talk about the idea that a shutdown combined with a UAW strike, perhaps, toss in their student loan payments resuming as well in the month of October, creating a bit more of a difficult economic cocktail than we are currently dealing with in this moment when things still look pretty strong when all is said and done. Are U.S. businesses bracing for a recession still, or is there now faith in that soft landing narrative, and despite all those things, a thought that we'll be okay?
I think business is looking at their own operations, and they're feeling pretty good. I mean, American consumers are strong, demand is strong, and so if you look at forecasts from either our surveys of small businesses, mid-sized businesses, even large companies, the outlook for their individual businesses are pretty good. The question is can you add enough of these external factors, particularly these self-inflicted wounds, where that begins to change? And I don't think that's been internalized for a lot of businesses yet. But listen, pile a couple of these things on: a prolonged, expanded UAW strike, a government shutdown, the resumption of student loans, which has been factored in, and we could be in for a world of hurt.
Throw in $100 barrel oil, and you've got quite a confluence there, Neil. I'm glad you could come talk to us today. Thank you for weighing in on an incredibly important time here. The strike, the shutdown. Kaylee, we can keep going.
Indeed.
Neil Bradley, Executive VP, Chief Policy Officer at the U.S. Chamber of Commerce. Let's stay in touch. With Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, and NASDAQ all in the red. We are now on track for a losing week on the S&P 500 index. Right now, the S&P is down 54 points to 4450. Going to end the week below 4,500, down now by 1.3%. The Dow lower by 268 points. That is a drop of 0.8%. NASDAQ down 233, a decline there of 1.6%. Among some of the big tech names moving lower today, we do have shares of NVIDIA lower now by 3.7%. Amazon trading lower by 2.9%. So big tech leading the way lower. The NASDAQ 100 index down 288 points, a decline of 1.7%. 10-year yield 4.31% with a 2-year at 5.02%. Spot gold up $13 the ounce to $19.24, a gain of 0.7%. West Texas Intermediate crude remaining above $90 a barrel, $90.64 right now on WTI. We've got West Texas Intermediate up by 0.5%. Automakers are on strike, or I should say the Auto Workers Union is on strike, and the automakers shares are trading higher. Right now we have got General Motors up by 1%. Ford, little changed, up less than 0.1%. And Stellantis, the parent of auto names such as Chrysler and also Dodge and Fiat, Stellantis shares up now by 2.2%. Again, recapping stocks lower, S&P down 53, a drop there of 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
So the strike is on. The shutdown has yet to happen, though everybody you talk to in Washington will tell you it's coming, whether it's at the end of this month or later in the year. Kaylee Lines is with me here in Washington as we try to follow the beat on this. Lawmakers, of course, heading out of town, so we're not going to have any news likely till Tuesday.
Yep.
Right? No progress was made this week. In fact, there was regression as they were unable to even begin debate on defense funding in the House.
Yeah, and in the Senate, where things have been operating a lot more smoothly.
Yeah.
It was a lot harder with that minibus than I think many people anticipated.
And they've been in the lead here, but
right.
there is some consternation. You heard Congressman Costa.
I did.
Use the word terrorists when talking about members of the House Republican Conference. Of course, he's a Democrat from California, but he's a moderate, and he's in a district next door to a guy named Kevin McCarthy, who he says he's working with on all of this, and he's confident the speaker will avoid a shutdown. Here's what he said.
There are a group of congressional extremists, some call them terrorists, who simply have required the speaker to meet a list of demands for their votes to avoid a government shutdown.
I asked him if the speaker could control what he called terrorists. He actually seemed to think so, but he would be, I guess, a voice in the wilderness on that.
Yeah. I mean, granted, McCarthy to this point has been able to. All of the must-pass bills have passed to this point. He got the debt ceiling deal through, even though a lot of people were unhappy with it, and remained speaker.
And it's now in shreds.
Yes. And the question is, can he kind of repeat that miracle this time around? Maybe that's a little bit more uncertain.
Maybe Mike Dorning has it figured out. He's with us now on Sound On. Of course, Bloomberg politics reporter. Mike, you've been covering Capitol Hill for a minute. Is Kaylee Rice going to take a miracle?
It's looking pretty unlikely that they're going to be able to avert a shutdown. That said, when these deals come together, they come together at the very end. My colleague, Steve Dennis, who's covered the Senate a long time, always has this joke. It's no, 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 yes. But here it looks like there are enough elements in the Republican Party that really just want a shutdown, that it's unlikely that they'll be able to avoid at least some shutdown.
Well, it becomes a question of exactly when that shutdown comes, Mike. If it comes on September 30th or right after when it's expired, or if he could, while not being able to pass all the appropriations bills, get a continuing resolution passed, a kicking of the can down the road to, say November. Does even that still look hard to do?
It's hard. Listen, it's never a good sign when the Speaker of the House is telling his conference, his party, bring it on if you want to unseat, go bring the motion. That's not a sign that things are working really well. My many years of sophistication can tell me that. And here you've gone through this period where this past week, just trying to come up with an internal Republican position for the House, never mind actually negotiate anything with the Democrats or the White House, has just gotten worse and harder, and they're all at each other's throats. Now, they'll probably be able to get beyond that at some point, but the reason why they're having so much trouble is that there is a significant portion of the House Republicans that are bound and determined to go to the mat, and they're a large enough group to unseat McCarthy.
There are other Republicans in the House now who are urging the Speaker to bring the defense spending bill to the floor. Hal Rogers, Kentucky, Dave Joyce of Ohio, both talking to Politico. They say just put it on the floor for an up or down vote and dare the mutinous Republicans to oppose it, as Politico writes. Is there a strategy there?
I mean, the strategy is people like Hal Rogers and the rest of them are on the opposite side of these hardliners. That might work, but it's not necessarily likely to work. This speaker has lost even some procedural votes because he's tried that strategy, and that daring them to vote no strategy, they have been willing to vote no, at least to bring down rules, and they would have the explanation here that they are trying to bring down federal spending and that they're determined to do that here. And these Republicans who are behind this are not really in a lot of danger in their districts. They come from deep red districts, and their very strong stride and style plays very well in their own districts. Moreover, it gets them more money in terms of small dollar contributions. So this traditional idea from people like Hal Rogers and people in part of the national security establishment of the Republican Party, or the sort of Main Street establishment part of the Republican Party, that this will be too embarrassing, I don't think has proven to be effective with these hardliners.
So, of course, the hardliners have issues with a number of things. One of them, though, being funding for Ukraine, Mike. And we have news confirmation today that Ukrainian President Volodymyr Zelensky is going to be in Washington next week after the United Nations General Assembly at the White House and on Capitol Hill. What kind of reception is he going to get? Can he actually change the minds of those in Congress who are on side, stop sending them money?
Well, I think he can buck up the people that are on the side to send the money, to really stick to their guns, and that's going to be important for him. This is going to be time very well spent for President Zelensky to buck up people like Mitch McConnell, people like Mike McCall, people who are part of the national security establishment within the Republicans, to insist that there be aid to Ukraine in there. So I think that will be time well spent. It will be effective. I don't know that he'll turn around the other people that easily.
Well, that's, I guess, the big question here. But there's more to this than just Ukraine and defense spending. Mike, if you talk to Chip Roy or Andy Biggs or others on the Freedom Caucus, they want cuts. They were not satisfied with the debt ceiling deal that Speaker McCarthy cut with the White House. It's not really a deal any longer. If they cannot exact the cuts they want, can Speaker McCarthy get something passed without them is the question, I suppose. And he's not ingratiating himself to Democrats right now by launching an impeachment inquiry, is he?
Yeah, I think that where you're seeing a breakdown there is there had been this implicit idea that we're the hardliners, and not even implicit, some people openly said it, we're the hardliners to try to unseat McCarthy. At least some Democrats would be willing to come to his aid and make up those votes so he could stay speaker. I do think that if McCarthy can propose legislation that would appeal to both Democrats and moderate Republicans, he could still get Democrats to vote with him for, the temporary measure keeping the government open, that they wouldn't, out of spite over the impeachment thing, block a temporary resolution to keep the government open. But the impeachment effort is probably weakening the support he might get from Democrats in a fight over ousting McCarthy. Here he's going to just have to decide if he can reach something acceptable where he's going to take some Democratic support and some moderate Republican